Okay, let's continue with the discussion. In the previous session, we were doing joint and byproduct costing. I'll quickly again discuss the concepts and the pending concepts. Do two, three questions which is pending, and then I move to standard costing. Now, getting back to joint and byproduct costing, we learned that joint and byproduct costing comes into picture when I use a single raw material and produce two or more products. The stage at which you get these two or more products is called split off point. Any cost which you incur till this is called joint cost, and any cost which is incurred after this is called further processing cost. The crux of this chapter is how do you distribute the joint cost to the various joint products or joint product and byproduct, that is byproduct and main product. How do you distribute this cost? In that, the joint product distribution I've already discussed. Today I'll be discussing on the byproduct side as well. Now, we learned that there are four steps we'll follow. First, you'll have to identify the joint cost, then a ratio of distribution. The ratio depends on the method name. There can be a physical units method where it is distributed on the basis of units, survey method where it is units into points, contribution margin method where I distribute the costs or I differentiate the cost as variable cost and fixed cost. Variable cost on the basis of physical units, fixed cost on the basis of contribution of the product. Sale value at split off where you distribute on the basis of sale value at split off. Sale value after further processing where you distribute on the basis of sale value after further processing. And NRV method. NRV method means based on NRV, and NRV is equal to sale value after further processing minus cost incurred to complete the manufacturing called as FPC, further processing cost, minus cost incurred to complete the product, that is technically, sorry, cost incurred to sell the product, that is selling and distribution cost. And if any estimated margin is given in the question, you will have to subtract that also in the NRV calculation. So identify joint cost, identify ratio of distribution, distribute joint cost, and prepare an income statement. A product can be sold at split off, a product can be sold after further processing. If you sell at split off, FPC will be not applicable. FPC will be not applicable because I'm selling the product at the split off stage. These are the methods I said: physical measurement, survey, contribution margin, sale value at split off, sale value after further processing, and NRV method. And this is the format we are going to use to decide whether I should sell my product at split off or after further processing. I compare two values: sale value after further processing less the sale value at split off, and this gives me incremental revenue. This gives me incremental revenue. I deduct something called as further processing cost. I deduct something called as further processing cost, and I get incremental profit or loss. If there is an incremental profit, sell after further processing. There's an incremental loss, don't sell it. So questions will tell you, they'll give you some information and say, please distribute the cost. Method name may not be given. Any method you take, distribute to the various product, prepare an income statement. Then they'll say, any changes in decision is needed, then you have to check this table: sale value after further processing less sale value at split off, incremental revenue, incremental cost, incremental profit, and then re-prepare another P&L. Then re-prepare another P&L. In case there is a negative contribution, which is a rare scenario, but if you get negative contribution under physical units method, under the contribution margin method, then the fixed cost will not be distributed to that negative contribution product. If it's fixed cost, there will not be any distribution. There will not be any distribution. It will go only to the product which are profitable, If sales is not equal to production, this got tested in the recent exam also, or in the recent MTP. If sales is not, so what they did is they gave sales and they gave closing stock. They gave closing stock in the question. Sales plus closing stock is production. Or what they can do, they can give production and sales. Production minus sales is closing stock. Production minus sales is closing stock. In case there is a closing stock or production is not equal to sales, you will have to do per unit calculation. Next point is decision on further processing is asked. What is decision on further processing? That is sale value at split off, sale value after that comparison we do. And if there is a selling expenses, in a question, and the problem is asking decision on further processing, then you cannot do that short format. You have to prepare a profit statement if the product is sold at split off, another profit statement if the product is sold after further processing, and see the difference, whichever makes more profit. That is the decision we are going to take. In case of product specific selling expenses, we cannot use normal format comparing incremental revenues with the incremental cost. To decide, we should prepare a profitability statement if product is sold at split off, another profitability statement if it is sold after further processing. Share of joint cost of product A is 10 lakh. Product can be sold for 20 lakh at split off, and selling expenses 2 lakh. Selling expenses 2 lakh. So if you sell at split off, 20 minus 10 lakh minus 2 lakh, 8 lakh is my profit at split off. Product can be processed further. Product can be processed further, and you can sell it for 45 lakhs. You can sell it for 45 lakhs. In this case, now my selling expenses 5 lakh. My selling expenses 5 lakh. Joint cost will continue to be 10 lakh. Joint cost will continue to be 10 lakh. How much can the further processing cost be, so that I'm indifferent between split off or after? Indifferent means at split off same profit, after further processing also same profit. Indifferent basically means to me both are equal. To me both are equal. So in that case, I copy paste the same profit, and further processing cost is balancing figure. Further processing cost is balancing figure. To cut it short, you cannot use that short format. What is short format? Is incremental revenue, incremental cost. That approach will not work in case there are product specific selling expenses. In case there are product specific selling expenses. Another variant which ICI tested even in the recent exam is loss in processing. What is loss in processing? Is if I sell at split off, I can sell 1000 units. So 1000 into 20 is my sales. But if I sell after further processing, I'll sell it at 40, but it will be only 800 units. It will only be 800 units. Reason for 800 is there is a 20% loss in processing. There is a 20% loss in processing. In the recent exam, they said there is a 2% loss in processing. So you need to consider the loss in processing. You need to consider the loss in processing. At split off, you will sell different units. After further processing, you will sell different units. In case of loss in processing, we should prepare an input output chart. We should prepare an input output chart indicating units produced and loss. I'll show you an example. A company has introduced input of 1 lakh 50. The loss in the process is 5%. The loss in the process is 5%. So of 1 lakh 50, 7,500 is loss. 7,500 is loss. And the output of A and B, and the output of A and B is in the ratio of 1 is to 2. So I got 142 500, and the ratio is 2 is to 1. So 1 is to 2. 47 500, 95,000. 47 500 and 95,000. Then it says a proposal is available. All this is different story. Basic thing is you have to do something like this. You have to do an input output statement in case there is a loss. The question will further say A will have a loss of 10%, B will have a loss of 5%. Some analysis will be there. You will have to prepare an input output chart to exactly understand how many units have been produced by the company, and then balance analysis remains same. I think I have one question on this. I'll do it when I discuss it. Estimated margin given in question. Any problem, if they give any estimated margin, you have to follow NRV method for joint cost distribution. You have to follow NRV method for joint cost distribution. I've been telling that which method to follow is silent, but in case there is an estimated margin, NRV method of joint cost distribution will come into picture. Okay. Constant gross margin percentage. Now, what is constant gross margin percentage? Is the profit margin of the two products which we have, or three products which we have, should be same. How will it happen? Listen. A is sold for 1 lakh, B is sold for 2 lakh. 1 lakh, 2 lakh, overall number is 3 lakh. Overall number is 3 lakh. Then it says further processing cost is 40, 60. 1 lakh rupees is the further processing cost. Joint cost is 1 lakh 10. This joint cost, I don't know how much should go to A, how much should go to B. Under constant gross margin, write A, write B, total. Sales less share of joint cost, less further processing cost, less selling and distribution. Overall profit is 90,000. Overall profit is 90,000. Overall margin is 30%. Overall margin 30% is 90,000 divided by 3 lakh. 90,000 divided by 3 lakh. If overall margin is 30%, A should also have 30% profit. B should also have 30% profit. A should also have 30% and B should also have 30% profit. So A's profit has to be 30,000. B's profit has to be 60,000. Share of joint cost is balancing figure. Share of joint cost is balancing figure. There was one exam problem where the share of joint cost became negative, which means I'm adding the cost and increasing the profit. Basically, 1 lakh is the first number, minus 40, overall profit has to be 70,000. Now, how can it be 70,000 if share of joint cost is negative? It's a very rare scenario, but constant gross margin percentage method basically means I need same profit margin. I need same profit margin for both the product. Last part of the chapter, accounting for byproduct, which is also very frequently tested. Now, what is byproduct is something which has lower value. Now, when I manufacture sugar, along with molasses comes or bagasse comes, which has lower value, We say it is a byproduct, and first main product is there. Now, what accounting is saying is, whichever product you are manufacturing, please consider its total sale value. Please consider its total sale value, and then you decide. You decide. See, on an individual basis, sugar is 50 rupees, molasses 1 rupee. Then you said molasses is a byproduct. But sugar, when I manufacture 1 kg, molasses, I get some 20-30 kg. I get a huge quantity of molasses and I get a very less quantity of sugar. So concept says you calculate the overall sale value. If it is significant, you can treat that product like a main product itself. You can treat the product like a main product itself and do joint cost distribution under the 6 methods which we learned. If you decide, no, value is not very high, I want to treat it as byproduct, then the treatment comes. So first is decide whether it is a byproduct or joint product. Decide whether it is a byproduct or joint product. If product does not require further processing, decide on the basis of sale value at split off. And if it requires, that is the byproduct require further processing, decide on the basis of NRV. If the value is considerable, it is like a joint product. And if it's not considerable, it is a byproduct. Now, if you treat it as byproduct, then only my next discussion. If it is a joint product, then discussion is over. Go back to the earlier segments of the chapter and treat it. Whenever our problems is, we treat it as byproduct. If you treat it as byproduct, two choices. Either record it in the credit side of P&L or reduce it from the debit side of P&L or reduce it from the debit side. What is recording in the credit side? Recording it as other income. What is reducing it to the debit side? From your joint cost. Reduce from your joint cost. Reduce the sale value or the NRV. Reduce the sale value or the NRV. Sale values if it doesn't require further processing. NRV means if it requires further processing. Normally what we do, this is the treatment. We will calculate NRV of byproduct and deduct the same from the joint cost. Balance joint cost will be distributed among various products which are there. Balance joint cost will be distributed among the various products. This is what most of the exam question treatment will be. You will calculate NRV. How do you calculate NRV? Sale value less further processing cost, less selling and distribution cost, less estimated profit. In fact, what we do is we'll prepare an income statement. I'll write sales, less further processing cost, less selling and distribution cost, less share of joint cost and profit. Profit will be given in the question. Share of joint cost will become like a balancing figure. You'll understand when we do a question, but concept is very simple. First, you have to decide whether it is a joint product or a byproduct. This can come as a theory question also. What is the accounting treatment of joint products? And so what is the accounting treatment of byproduct? What is the accounting treatment? You have to first decide whether it is a considerable value or not a considerable value. Not a considerable value, record it in the credit side of P&L or reduce it from the debit side of P&L. Record it in the credit side, that is record as other income or deduct it from debit side. Debit side is deducted from cost. Clear? Any doubts on this? Okay, let's come to this question 5, where two, three concepts. I think I had told you to try it, but anyway, I'll explain it. Here, those two, three things. One, if you have selling expenses, you have to do a separate statement, and loss analysis will be done. SV Limited processes 9 lakh kgs of raw material, 9 lakh kgs of raw material in a month at rupees 95 per kg in department X, 95 per kg in department X. The input output ratio is 100 is to 90. The input output ratio is 100 is to 90. You can write along with me 9 lakh. As I read, I'll explain it. 9 lakh raw material, loss output, loss and output. I introduce 9 lakh kgs. Input output ratio is 100 is to 90. Input output ratio is 100 is to 90. That is, you will get only 90 units output, 10 units loss. So loss is 90,000. Output is 8 lakh 10,000. Output is 8 lakh 10,000. I added 9 lakh units. I got a loss of 90,000 and output of 8 lakh 10,000. Input output ratio is 100 is to 90. 100 is to 90 would indicate that 100 units of raw material, 100 is equal to 9 lakh, 90 is equal to output. Processing of the material results in two products, P1 and P2, in the ratio of 60 is to 40. So whatever you got split into two, P1 60-40 ratio. P1 and P2 in the ratio of 60 is to 40. P1 is 4 lakh 86,000. P2 is 3 lakh 24,000. P1 and P2 in the ratio of 486 and 324. 486 and 324. Then they are saying product P1 can be sold at split off or be processed further in department Y. Product P1, if you want, you can sell it at split off or process it further and sell it as what product? YP1, which is nothing but P1 is the name at split off, YP1 is the name after further. It's the same product. It is the same product. The input output ratio is 100 is to 95. So this 486, if I decide, can become loss, 5% loss. Tell me how much? 486, 5% loss. And you can get YP1, 95%. YP1 you can get 95%. How much? 4 lakh? 4 lakh 86 if I use, 5% is loss and 95% is processed product. 95% is YP1, which I can get. Any doubts on this? Then it says department wise utilize only for further processing. So this total is further processing cost. This total is further processing cost. Department wise only utilized for what purpose? Converting the P1 to YP1. Converting the P1 to YP1. And department X, 9 lakh into 95 is how much? 9 lakh into 95. 9 into 95. 8. 855. 9 into 95. Let's keep it as 9 into 95. 850. Sorry? That is why 855 lakhs. 855 lakhs plus another 350 lakh plus another 350 lakh. 855 lakh plus another 350 lakh is the department X expense. 855 lakh plus another 350 lakh is department X, which is the joint cost. Which is the joint cost. So how much is the joint cost? 855 plus 350. 1,205. Now I need to distribute this 1205 lakh cost. I need to distribute this 1205 between P1 and P2. The name of P1 can become YP1 if I want. The name of P1 can become YP1 if I want. There is a selling expense for the three product. Whenever selling expenses are there, we will not use that shortcut format to decide whether to sell it at split off or after further processing. Selling price of P1 and P2 is 110 and 325 and YP1 is 150. That is, I can sell this for 110, right, into 110. First product P1 can be sold at 110. This can be sold for 325. If you put the proper diagram, everything is in place, into 325, and this can be sold for 150. This can be sold for 150. With this, problem is over. With this discussion, the problem is almost over. I'll anyway discuss the full solution, but this is what major analysis is. Now, what they want is statement showing the apportionment of joint cost. Joint cost is 1205. In what ratio? Sales net of selling expenses. Sales net of selling expenses. They have given some different method now. Sales net of selling expenses. Joint cost will have to be distributed to P1 and P2. P1 28.38 lakh is the selling expense. P2 25 lakh is the selling expense. 28.38 and 25. 28.38. So listen, the ratio of distribution is this multiplied with 110 and subtract selling expense. Subtract the selling expense. They are saying sale value net of means I'll have to subtract. Net of means I'll have to subtract. Can you do in the calculator? 4.86. We'll do it in lakhs. 4.86 into 110 minus 28.38. 4.86 into 1. How much? 0.22. Other side is 3.24 into 325 minus 25 lakh. 10. In this ratio, I have to distribute the cost. This is the ratio to distribute the cost. The ratio of distribution is 506.22 is to 1028 between P1 and P2. The question is saying distribute in the ratio of sales net of selling expenses. Sales net of selling expenses. So you see the calculation here. 1205. Ratio of distribution is 506.28 is to 1028. 506.22 is to 1028. And my distribution is 397 and 807. 397 and 807. You got this number only, no? 506. Yeah, 506.22 on 1028. The ratio they have given in this question is what? Sales net of selling expenses. Sales net of selling expenses. Whenever losses are there, please draw the diagram properly. Input leads to losses, output. Again, divide, again input, output, loss. Loss will keep coming. Once you decide this properly, then it's very simple. Then they are saying statement of profitability at split off. At split off, the name is P1, P2. After further processing, the name is YP1. The name is YP1. At split off, it is P1, P2. After further processing, the name is YP1. I'll quickly discuss. If you sell at split off, sales is 4.86 into 110. 4.86 into 110. 3.24 into 325. And if you sell after further processing, 4.617 into 150. 4.617 into 150. Share of joint cost we just now calculated. We subtract that. Selling expenses subtract. And for YP1 you have to subtract 128 further processing cost. For YP1 you have to subtract the further processing cost. And this is how the statement will look. P1 is making a profit of 108. P2 is making a profit of 220. YP1 is better than P1. YP1 is better than P1. So I will do further processing of P1 and make it as YP1. I'll do further processing of P1 and make it was YP1. 2-3 important points. See the further processing cost. Not applicable. Not applicable. Joint cost for P1 is same. YP1 is also same, because P1 and YP1 is not a different product. It is the same product. It is the same product. That shortcut approach will not work. What a shortcut is? Sale value after further processing less sale value at split off. That approach will not work. I cannot use that approach to do the calculation. Reason is very, very simple. In case there is a selling expense. You have to write it separately only. You'll have to write it separately. If you try that shortcut, you will not get the answer. You will end up getting a wrong answer, because in the shortcut format, selling expenses do not come. Selling expenses do not come. Any doubts on this? Any doubts? So whenever there is a loss in further processing, please draw the proper diagram. If you draw the diagram, you will be able to get to the answer. Now coming to byproduct costing, let's look at this. Company manufactures one main product M1, two byproducts B1 and B2. For the month of January 2013, following details are available. Total cost up to separation point, technically called as joint cost. Technically called as joint cost is 2,12,400. Cost after separation is further processing cost. B1 and B2 has a further processing cost. B1 and B2 has a further processing cost. Number of units produced, selling price, estimated net profit, estimated selling expenses, no beginning, allocation of joint cost, and an income statement. What we do is, our preferred treatment is calculate NRV of byproduct. Calculate NRV of byproduct. That NRV subtract from 212,400. Balance whatever is there, give it to only M1, because there was only one main product. Only one main product. If there was a M1, M2, M3, then distribute the balance cost to M1, M2, M3. Which method? Any of the six method: physical units, survey method, your contribution margin. So first let's calculate NRV. Working note 1, computation of NRV, right? Working note 1, computation of NRV, B1 and B2. Then I'll give you a short approach. Computation of NRV. Particulars B1 and B2. Sales less further processing cost less selling expenses less estimated profit, NRV. Sales less further processing cost less selling expenses less estimated profit, and NRV. Sales for B1 and B2 is 1800 units into 40 rupees. 1800 into 40. I'll analyze M1 later, okay? 1800 into 40. B2 3000 into 30. 3000 into 30. Further processing cost is 35,000, 24,000. 35 and 24. Further processing cost is 35,000 and 24,000. Selling expenses given in the question is 15%. Profit margin is 20 and 30. Selling expenses 15%. 15%. 15%. Profit margin is 20 and 30. 20%. 30%. Gap is called NRV. Gap is called NRV. Gap is the NRV. One of the most commonly used method. One of the most commonly used method is NRV. Now, joint cost allocated to M1. What goes to M1 is 212,400 given in the question, minus 11,800 minus 25,500. Minus 11,800 minus 25,500. 212,400 minus 11,800 minus 25,500. What's the amount you get? Now listen. See, when I subtract it indirectly, what it means is 175, 100 will go to M1. 175, 100 will go to M1. Balance has to go to some product, no? Because 212, 400 is the cost. 175, 100 will go to M1. Technically, 11,800 is the joint cost of B1 and 25,500 is the joint cost of B2. That's what technical meaning is. When you say I subtract, 11,800 goes to B1 and 25,500 goes to B2, 25,500. Now, in exam situation, or if this question comes, I will not be doing this way calculation. How will I do? Now, write particulars M1, B1, B2 total. M1, B1, B2 and total. Instead of doing it like this is a logical explanation. I can do it like this: sales less further processing cost less selling expenses less share of joint cost profit. This is how I will do it from an exam point of view. Quick answer: sales less further processing cost less selling expense less share of joint cost and profit. First product sales is 4,000 into 100. 4,000 into 100. B1, B2, you already know the sales. 4,72,000 and 90. The first table is not even needed to solve the question. I wanted to tell you that I'll call it as NRV and subtract it. Further costing cost is 0, 35, 24. 35 and 24. 0, 35 and 24. Selling expenses is 20, 15 and 15. 20%, 15% and 15%. 20, 15 and 15. 20, 15 and 15. Share of joint cost, I will write it later. Profit is given in the question. B1 profit is 20%, B2 profit is 30%. M1 profit they will not give. They have given profit for two products, 20 and 30. So write profit directly: 20%, 30%, 20% and 30%. Balancing figure is share of joint cost, technically NRV. Balancing figure. If you tell me the balancing figure here, what should be the balancing figure here in B1? So that I get a profit of 14,400. 11,800, 25,500. This is what will come as balancing figure. Balancing figure 11,800, 25,500 will be the balancing figure. Will be the balancing figure. As I said, there is no need to do the earlier calculation. Directly we will do this only and call it a share of joint cost. NRV is the joint cost allocated to the byproduct. NRV is the joint cost allocated to the byproduct. Overall cost was 212, 400. Balancing figure is 175, 100, and I get profit accordingly. This is part 2 of the question: income statement as well as distribution of cost. Income statement as well as distribution of joint cost. Income statement also comes in this. Joint cost distribution is also done. This is with byproduct, okay? Accounting with the by. If we had two main products and all, then the balance you have to distribute between A and B, C and D, whatever products are there. Any doubts in this? If you see the answer, I've directly done only a P and L. In the P and L, the share of joint cost is balancing figure. The share of joint cost is balancing figure. Okay, let's look at one more question. Three products X, Y, and Z along with byproduct B are obtained in a crude state which require further processing at 5 for X, 4 for Y, 2.5 for Z. 5 for X, 4 for Y, and 2.5 for Z before sale. Byproduct is, however, saleable as such to a factory, Selling prices of the three products and byproduct assuming the yield and net margin of 25% on cost will become 20% on sales. 25% on cost will become 20% on sales when you do the calculation. This was the price fixed. I am not very sure whether I'll ultimately make this profit or not make this profit. This was the profit margin fixed by the company. This was the profit margin. They had an estimated margin in mind saying that I want a margin of how much? 25% of cost. During a period, joint cost is 90,800, 8,000, 6,000, 4,000. Byproduct should be credited to the joint cost and only the net joint cost are to be allocated to the main product. Only the net joint cost are to be allocated to the main product. What is byproduct should be credited? Reduce it in the debit side of P&L. Reduce it in the debit side of P&L. First, I'll calculate NRV of the byproduct. I'll calculate NRV of the byproduct. You keep listening. There's nothing for you to note down. How many units of byproduct manufactured in this example? How many units of byproduct? Participate, guys. How many units of byproduct manufactured? 1,000 units. They will be sold for 1 rupee. They'll be sold for 1 rupee. So NRV is equal to 1,000 minus 20% profit. Minus 20% profit. So 1,000 minus 200, 800. So from 9,800 remove 800. From 9,800 remove 800. Leftover number is 90,000. As I said, our preferred accounting treatment is compute NRV of the byproduct and deduct the same from the joint cost. Balance joint cost can be distributed among various products. Which are the product? X, Y, and Z. X, Y, and Z. What method will I follow? I will follow NRV method. Reason is there is an estimated profit margin given in the question. There is a estimated profit margin given in the question. Will that become the final margin? I don't know. Because if that was becoming the final margin, they will not ask this. They are asking what is the actual margin. They are asking what is the actual margin. If the final margin will be 25%, why will they ask that? What is the margin? So in this question, estimated margin is given. Estimated margin is given. As I had said, in case estimated margin is given in question, what is estimated margin? 25% on cost or 20% on sales. Calculate what? NRV and distribute in the ratio of NRV. Distribute in the ratio of NRV. Listen, I'll calculate NRV for one product. Product X. Product X. We have produced 8,000 units. We have produced 8,000 units into 13.75. 8,000 into 13.75 sales. Tell me the value. 1 lakh less profit. Estimated profit is 1/4 on cost. 25% on cost. It will become 20% on sales. When you do the calculation, it will become 20% on sales minus 3 items to be subtracted for NRV. One is estimated profit, selling expense not there, further processing cost which is 5 per unit, So I have to subtract, and this gap is called NRV of X. Like that you will get NRV of Y, and like that you will get NRV of Z. You will distribute the joint cost and then prepare a proper income statement. What will the income statement have? Sales less further processing cost less joint cost, profit, and profit margin as a percentage of cost. Requirement is profit margin as a percentage of cost. So see here, this is the NRV calculation, and on the basis of NRV distributed the joint cost, prepared an income statement. In reality, I made margin of only 17, 18, and 16. I made margin of only 17, 18, and 16. I'm not getting into all this calculation. This is very simple for you to understand. main approach for byproduct is very simple. What will you do for byproduct accounting is you will calculate the NRV of the byproduct. You will calculate the NRV of the byproduct deducted from the joint cost, balance one product there, give it fully. Two, three products are there. Any method can be followed. This question, estimated margin is given. This question, estimated margin is given. If estimated margin is given in the question, we will follow NRV method of distribution. We'll follow NRV method of distribution. Clear? Any doubts on this? Question 8, you will be doing it at home, which is process costing and joint and byproduct costing. When you attempt at home, you will be able to get to the answer. Only thing I want to explain is cost per good unit. Cost per good unit. Our formula for cost per good unit was all expenses minus sale value of normal loss. In the expected output, what used to happen is processed production minus normal loss. We were subtracting normal loss. If joint and byproduct costing and process costing joins together, then in the numerator you have to subtract NRV of byproduct. You have to subtract NRV of byproduct, and in the denominator you have to subtract byproduct units. In the denominator you have to subtract byproduct units. In the numerator you have to subtract NRV. NRV, like what I've been doing till now. I've been telling that NRV has to be calculated and removed from the joint cost. Removed from the joint cost. So there is a question like this where they have ended up testing process costing, and in the last, when you go to process 3, so this will become a practice question for you to do. Process 1 and process 2 is normal process costing. Process 3, when you come, it will have normal output as well as byproduct. Normal output as well as byproduct. And when you do the calculation, everywhere it is like this: debit side of process account minus normal loss, lost product minus NRV of byproduct minus byproduct units, minus NRV of byproduct and minus byproduct units. I don't want to do a process costing question now, but that's the concept. Concept is very simple. You will have to subtract NRV. What is NRV? Sale value less further processing cost less selling and distribution cost less estimated profit if given in question. Less estimated profit if given in question. If not given, ignore it. I don't have a problem. But if it's given, then please subtract it. Clear? Any doubts on this? Okay. With this, our discussion on joint and byproduct costing gets over. I'm left with two chapters. One is standard costing. One is operating costing. Operating costing, I will try to record it maybe in the next few days. If I record, it will be uploaded in my YouTube channel. Else, in my YouTube channel, the old videos are available on operating costing. So you can see that. Now, coming to standard costing, as I had said earlier that I wanted you to watch a video. There was a playlist which was given. 15 minutes video were there on three topics. One was on material variances, one was on labor variance, one was on overhead variance, and one you could have seen for sales, but I told not to see because it's not applicable for you. Unless you have seen those videos, you may struggle little bit in the session. Okay, I'll first tell what is standard costing, where did this come into picture, and then do few questions around it. Now, standard costing or basically variance analysis, the other name is, basically comes into picture when an organization follows chapter 15. What is chapter 15? Budgets and budgetary control. If you are following chapter 15, then only standard costing comes into picture. So if an organization has a budget at the end of the month or at the end of the year, at the end of the quarter, at the end of a week, I want to ascertain how did I perform as compared to the plan which I set in, That is technically called a standard costing or variance analysis. Now, in that, just give me a minute. Now, this entire chapter, or be it most of the other chapters, but this I'm very sure will get fully revised in case you do only the MCQs itself. In case you complete all the MCQ itself, you will get full clarity on it. Along with those 2, 3, even if practice questions are not done, also I'm okay. But this chapter, The full clarity is there on MCQ, you're kind of done. So standard refers to the planned performance, actual refers to the actual performance. Standard costing analyzes the variation in performance as compared to the budget and fixes responsibility for taking what corrective action. Now, first let's understand the difference between standard and budget, because these two are interchangeably used. The word, the term standard and budget is almost similar. One small difference. I told my company person produce 10,000 units and incur 20 lakh rupees. 10,000 units and incur 20 lakh rupees. He has produced 8,000 units. He has produced 8,000 units, incurred 17 lakh. Incurred 17 lakh. He comes and tells me, I saved 3 lakh rupees for the company. I saved 3 lakh rupees for the company. I told him 10,000 units, 20 lakh rupees. He says, I have produced 8,000 units. Cost is only 17 lakh. Cost is only 17 lakh. So I have saved 3 lakh rupees for the company. Please pay me bonus. Please pay me bonus. What is the problem in this argument? Units are changing. So 20 lakh is called budgeted cost. 20 lakh is called budgeted cost. 17 lakh is called actual cost. For 8,000 units, what cost I should have incurred? For 8,000 units, how much I should have incurred? That is called standard cost. Standard is always any standard time in the labor chapter was calculated with the help of actual output, when we did EOQ, raw material consumption, standard raw material consumption was calculated with the help of actual production, AO into input by output. When we did our labor chapter, ST equal to AO. Any standard is always computed with the help of what? With the help of actual performance. Now, if I analyze at a per unit level, 20 lakh divided by 10,000 is 200, or 16 lakh divided by 8,000 is also 200. At a per unit level, there is no difference. At a per unit level, standard cost and budgeted cost is same, because many places we interchangeably use, because at a per unit level they are same. At a per unit level, standard cost and budgeted cost is same. So budgeted cost refers to the cost to be incurred for budgeted output. Standard cost refers the cost to be incurred for actual output. For actual output, variance is the difference between standard and actual. Variance is the difference between standard and actual. Only one place, some formula we will do, budget minus actual. That is for fixed overhead, because fixed overhead does. See, if in this example I say 20 lakh is a fixed cost, 20 lakh is a full 20 lakh is fixed cost, then I am right, I saved 3 lakh rupees for the company. Then I am right, I saved 3 lakh rupees for the company, because fixed cost does not change with volume. Fixed cost does not change with volume. So I should be rewarded for it. I saved 3 lakh rupees for the company if it is a fixed cost. If it is a fixed cost, variable cost, obviously it should have gone down with the reduction in output. Clear? Now, first we are having material variances, where I clearly told I wanted you to go through this. In case you have not gone through it, you may struggle little bit, but still I will explain some of the formulae and then I start doing questions. So when I do material variances, material cost arises due to two reasons: quantity, price. Quantity refers to quantity of raw material, and price refers to the price at which you are planning to buy the raw material. Price at which you are planning to buy the raw material. So first situation is I can have single raw material. I can have single raw material, or I can have multiple raw material. I can have single raw material or multiple raw material. Single raw material, this side I have price. I have a standard price. I have an actual price. Standard price refers to the price to be paid. Price to be paid for buying 1 unit of raw material. AP refers to the price actually paid. Actually paid for buying 1 unit of raw material. SQ, standard quantity. AQ, that is AO. AO is output. AQ is raw material. AQ is raw material. Standard quantity refers to the quantity to be consumed. Quantity to be consumed. Standard means to be, and actual means what has happened. AQ refers to the quantity actually consumed. SQ refers to the quantity to be consumed. SP refers to the price to be paid. AP refers to the price actually paid. Standard time refers to the time to be taken. Actual time refers to the time actually taken. So, to be taken, what should have happened is standard. Now, in order to solve problem, we need a computation table, which you could have learnt in different ways from different people if you have gone for classes. I do a chart. From the chart, I start with SP, connect with the first item called SQ. Again, start with SP, connect with the second item called AQ, and start with AP and connect only with the last item. Connect only with the last item. I don't connect AP with SQ because I don't need it in the table. I don't need this in the table. This is what you would have seen in the video. SP into SQ, SP into AQ, AP into AQ. This is what will come in our table. SP into SQ, SP into AQ, AP into AQ. This top part is called as price variance, and this is called as quantity is called usage. Price and usage variance. Price and usage variance. Now the top part price variance is nothing but, listen, the difference between SP and AP, and usage is nothing but the difference between SQ and AQ. Any variance formula is always standard minus actual. Formula is always standard minus actual. Can it be actual minus standard? Do it, no problem. The formula is arranged in such a manner that if you do standard minus actual, you get a negative answer, it is an adverse variance, and you get a positive answer, it is a favorable. Some question SP can be more than AP, SP can be less than AP. This is just a chart to remember the formula. Now my price variance is nothing but this part, this top part, the green shaded part is my price variance, which from a formula point of view, it is a rectangle. AP connecting with AQ is one rectangle, and from there you remove the smaller rectangle, SP connecting with AQ. From there you remove the smaller rectangle, you will be left with that green portion. You will be left with the green portion. How you arrive at the formula is, from the bigger rectangle, I remove the smaller rectangle, but formula is smaller minus bigger. Formula is smaller minus bigger. Just see, this chart and all is just a tool to remember the formula. So the green shaded portion is SP into AQ minus AP into AQ. Similarly, this part, the usage is SP into SQ, the smaller rectangle minus the bigger rectangle, SP into AQ, SP into AQ. In case you have gone through the video earlier, I think you should be able to follow it. If you have not gone through the video, you may struggle it. Still, after today's session, you are not very clear on standard costing, then there's only one choice. There is a 15-hour video. 15-hour video. If you have time, you can watch that. The playlist is available in my channel, where at least see the first video fully, 3-hour video. Full standard costing clarity will come. Balance are just copy pasting of that. So this is the first situation. Single raw material, SP into SQ, SP into AQ minus AP into AQ. The top part is called price variance. The bottom part is called usage variance. The bottom part is called usage variance. Usage is SP into SQ minus SP into AQ. Price is SP into AQ minus AP into AQ. Later on, SP AP continues. SQ AQ continues, but I can have one more raw material. If you have multiple raw material, in between this, an item comes called as RSQ. In between, an item comes called as RSQ. The table is SP into SQ, SP into RSQ, SP into AQ, AP into AQ, SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. The top part continues to be rate variance. What is the formula for rate variance? Top part, what is the formula? Part is SP into AQ minus AP into AQ. Bottom together is usage. Bottom together is usage. So smallest rectangle, SP into SQ minus SP into AQ. SP into SQ minus SP into AQ. This usage is further broken down into yield and mix. Yield and mix. Can you tell me what is the formula for material mix variance? SP into RSQ minus SP into AQ. SP into RSQ minus SP into AQ. And yield variance is SP into SQ minus SP into RSQ. The chart will give you the formula. Major worry of the student is remembering the formula, which I don't want you to do. So, the first segment I did is this material variance. I need standard quantity. This is the budgeted quantity which I have to use for producing the actual output. Revised standard quantity. Revised standard quantity. If you have more than one raw material, you put the total of the actual quantity. You put the total of the actual quantity of raw material. Total of the actual quantity of raw material, and split in some original plan. Split that in some original plan. AQ refers to quantity to be used, standard price to be paid, actual price actually paid. If you have single raw material, SP into SQ, SP into AQ, AP into AQ, and these are the three formulae. In case chart is not clear, nothing is clear, you'll have to remember the table, you'll have to remember the formula, which I never remember. I never remember, that's up to you. Then multiple material, SP into SQ, SP into RSQ, SP into AQ, AP into AQ. I'll again repeat, the chart technique would have easily helped multiple students. If you watch the video itself, you will get clarity there. Lot of students have got benefited with the chart technique, because standard costing becomes difficult because you try to remember the formula. You try to remember the formula. Moment you try to remember the formula, you make it wrong because so many formulae are there, so much confusion happens. And these are the variances. I'm not going to even talk on any of the formula because all formula comes from there. All formula comes from there. Then I have labor, single labor, multiple labor. There's something called as with idle time and without idle time, with idle time and without idle time. So labor we have SR AR. This side we have SH AH, SH and AH. The table is SR into SH, SR into AH, AR into AH. This part is called rate. This is called efficiency. Can you tell me the formula for labor rate variance? SR into AH minus AR into AH. It's always standard minus actual. Efficiency variance formula. SR into SH minus SR into AH. Labor cost is the overall variance, which is the smallest rectangle. SR into SH minus the biggest AR into AH. This is single labor without idle time. Single labor without idle time. SR into SH, SR into AH, AR into AH. The top part is called rate variance. The bottom part is called efficiency variance. Single labor without idle time. Single labor without idle time. Then comes single labor with idle time. With idle time. With idle time means actual hours is broken down. Is broken down as actual hours worked and actual hours paid. Actual hours worked and actual hours paid. Worked is basically the number of hours where people have actually worked, and paid is I paid for more because there is idle time. There is idle time. In that situation, SR, AR, SH, AHW, AHP, actual hours worked, actual hours paid. SR into SH, SR into AHW, SR into AHP, AR into AHP. The top part is called rate, efficiency, idle time. Idle time is the gap between hours worked and hours paid. Idle time is the gap between actual hours worked and actual hours paid. Again, I'm repeating, you will understand all this better if you had gone through that video, because I cannot spend time on explaining that fully now. And in case you need more explanation, that was a 15-minute video, more explanation, then you have to watch the detailed playlist. But if formula is clear, then only I can solve question. When I solve question, I'll again be putting the chart and doing it. But formula clarity not there, very difficult for you to move in this chapter, because students struggle mostly with remembering the formula. Then this is second situation. Third situation is multiple labor without without idle time, without idle time. In that case, SR, AR, SH, AH, in between RSH comes. There in between RSQ was coming. There in between RSQ was coming. Here in between RSH come. SR into SH, SR into RSH, SR into AH, AR into H. This is rate. Put together is efficiency. This is yield. This is mix. Yield has another name called sub efficiency. Mix has another name called gang variance. Mix has another name called gang variance. If anybody asks me a formula, what is formula for yield variance? Comparing these two, SR into SH minus SR into RSH. Mix variance comparing the next two, RSH minus AH. Efficiency both together, SR into SH minus SR into AH. Rate variance, SR into AH minus AR into AH. Any formula can come from the chart. Any formula can come from the chart, provided you have clarity on the chart. You have clarity on the chart. Clear? Any doubts on this? And last was multiple labor with idle time, where I write SR, I write AR, SH, AH. In between RSH will come because it's multiple, and idle time will mean AHW, AHP, actual hours worked, actual hours paid, actual hours worked and actual hours paid. Table SR into SH, SR into RSH, SR into AHW, SR into AHP, and AR into AHP. Top part is called rate. Top part is called rate variance. The bottom part, the last one is called idle time. This together is efficiency. This is yield. This is mix. Yield and mix. Now, unless the clarity is there in the formula, again and again you'll only keep struggling. You will keep struggling. Clear? Any doubts first? Any doubts? For the broad concept is very simple. What we do in standard costing is we try to compare the standard performance with the actual performance. The purpose of comparison, is to find out, is there any variation in performance? Is there any variation in performance? And in case there is a variation in performance, I want to fix responsibility. I want to fix responsibility. If you look at the material, this MCQs and all, you leave it. I have labor variances, 4 situation: single labor without idle time, single labor with idle time, multiple labor without idle time, multiple labor with idle time. Technically, if you remember the table and the formula, problem is over. But why to remember so many things? That is where the chart comes. The chart will give you the table and the formula automatically. Similarly, I have for variable overhead only one situation. We do not have multiple situation, or variable overhead only one situation. The variable overhead situation is very simple. SR, AR, SH, AH. SR into SH, SR into AH, AR into AH. The top part is called expenditure, bottom part is called efficiency. The top part is called expenditure, the bottom part is called efficiency variance. No multiple situation. SR into SH, SR into AH, AR into AH. Some conversion factors are there. When I do a problem, I'll explain at that time those conversion factors. But SR into SH, SR into AH, and AR into AH. Very simple kind of a situation as far as variable overhead variance is concerned. Then comes your fixed overhead variances. Here we have two situations. One where data on days is available, that is called with calendar, and second is without calendar. With calendar variance and without calendar variance. One issue with fixed overheads is they do not change. They do not change with changes in output. They do not change with changes in output, and this leads to certain complication. Now, first is without calendar. Without calendar means without an item called PFOH, possible fixed overhead. Without calendar is without PFOH. What is with calendar and without calendars? If question gives you actual days and budgeted days, both data, actual days and budgeted days, you will calculate calendar variance. If that data is not there, you will not calculate calendar variance. Here I have only SR. I don't write AR. I don't write AR. So SR into SH, SR into SH, I have AH and BH, AH and BH, budgeted hours. Till now, budget was never worry. Budget was never a worry. We are bringing budgeted hours for the first time. We are bringing budgeted hours for the first time. The reason for bringing budgeted hours is because fixed overheads do not change with volume. So table is SR into SH, SR into AH, SR into BH, and the outer column is called AFOH. The outer column is called AFOH, actual fixed overhead. I don't write it as AR into AH because I don't want that. I want to write it as AFOH. The outer part is called expenditure variance. The outer part is called expenditure. So the outer part SR into BH minus AFOH. SR into BH minus AFOH. First part is called efficiency. SR into SH minus SR into AH. And second part is called capacity. SR into AH minus SR into BH. And together it is called volume. Together it is called volume. The first part is called efficiency. The second part is called capacity. Together it is called volume variance. Together it is called volume variance. In the same, if data on calendar is available, SR, SH, AH, there's an item called PH. PH means possible hours. I'll explain when I do a question. PH is possible hours. BH is budgeted hours, and the outer column is called AFOH. The outer column is called AFOH. This part is expenditure, efficiency, capacity, calendar, put together is volume. Efficiency, capacity, calendar, put together is volume variance. Volume variance is SR into SH minus SR into BH. Efficiency SR into SH minus SR into AH. Capacity SR into AH minus SR into PH. The capacity variance formula is different in two scenarios. There it is AH minus BH. Here it is AH minus PH, possible hours. And possible hours minus budgeted hours is called calendar variance. It's called calendar variance. Then we'll be doing something called as budgeted ratios. I'll explain that when I do a question. Okay. I'm kind of done with discussing the concept. What I'm going to do is I'm going to give a 15 minutes break. In case you have not watched that video earlier, you may take time to watch the video so that it becomes easier for you to follow what I'm going to do. I'm giving a 15 minutes break, mostly for going through the video in case you have not gone through, or going through whatever notes it is there. It is not a normal break where you can go out, you spend time, understand things, and then I start doing questions. 15 minutes. Okay, now I'll start solving questions. What I'm going to do is every question will ask for some or the other variance. Variance calculation I'll not be doing. I'll only be doing the table. After a table is done, variance is just a formula. That formula will come from understanding of the chart. So our focus would be I'll draw the chart. You need not draw the chart. From the chart, I'll put the table. Table you will do along with me. Table you will do it along with me. Unless it's a reverse working question, direct question and all easy to do. Reverse working will need the formula understanding. So once the table is done, application of formula saying that material cost is this minus this, material price is this minus this. That calculation we are not going to do it in the session. That calculation you will have to do either if you remember the formula you do it, or you have to understand the chart and from there pick the formula and then do it. So I come to now page 123, material variances. Textile Limited produces an article by blending two basic raw material. Following standards have been set for the raw material. Material A, material B. The standard loss in processing is 15%. During September, I have produced 1700 kg of the finished product. The position of stock and purchases is as follows. Calculate all relevant variances. Assume FIFO. Also compute material purchase price variance. What is this material purchase price variance? That also I'll explain when I do the calculation. So first, any material question, you have to decide whether it is a single raw material or multiple raw material. Is it a single raw material or multiple raw material here? Participate. I want participate. Multiple raw material. There's a raw material A and there's a raw material B. So if it is a multiple raw material, you are not going to draw this diagram, but multiple raw material is like this: SP, AP, SQ, AQ, and in between you have RSQ, some authors call it as RAQ also, doesn't really matter. So my table will have SP into SQ, SP into RSQ, SP into AQ, AP into AQ. The top part is called okay, price area, price. This is called usage, this is called yield, and this is called mix. Let's not worry now about the formula. Our job is to fill the table. If we get the table properly, variance calculation is just a formality. Now below the table, below the chart, basically in your notebook, question 1, you are not going to do a chart. Question 1, first column is called material, SP into SQ, SP into RSQ, SP into AQ, AP into AQ. These are the 4 columns I have to get. SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. If I get these columns, write the table SP into SQ, SP into RSQ, SP into AQ, AP into AQ. If we are able to get this chart, that is this table properly, calculation is just a formality where some of you may struggle now because you don't remember the chart, you don't remember the formula. So I'm not going to even do that. That part of it, you be clear on the formula and then you keep applying it. So once the table is done, you will leave half a page space or 1 page space where you will do the variance calculation. After the class is over, you can do variance calculation applying formula. Two material we have, A, B and total. A, B and total. Material A, material B and total. SP refers to the price to be paid for purchasing 1 unit of raw material. What is the standard price given in the question? Read here. Standard price in the question. 4 rupees and 3 rupees. 4 rupees and 3 rupees. 4 rupees for material A, 3 rupees for material B. Write it at 3 places. 4 into and 3 into 3 places. SP, 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 4 into 3 into. AP refers to the price actually paid. Listen, AP is 3,400 divided by 800, but there is a check. There is a check. Reason is there is some opening stock. There is some opening stock. So I'll come to AQ in a minute. I'll come to AP in a minute. Now, first we fill price like this, then we fill quantity in the reverse order. That is AQ, RSQ, and SQ. AQ, right? Note 1, AQ equal to opening stock plus purchase minus closing stock. AQ means quantity consumed. Opening stock plus purchase minus closing stock. AQ is quantity consumed. A equal to 35 plus 800 minus 5. 35 plus 800 minus 5. 830. B equal to 40 plus 1200 minus 50. 40 plus 1200 minus 50. 1190. Now, when I do my AP into AQ, whatever I consume, FIFO method says opening stock is consumed first and the balance comes from the current year purchase. FIFO method says opening stock is consumed first. So in this 830, 35 units I consume first. 35 is the opening stock. If nothing is given, opening stock would be at 4 rupees. Standard price. Opening stock would be at 4 rupees. Opening stock would be at 4 rupees. If nothing is given in the question and there is data, many questions stock data will not be there. If stock data is not there, directly purchases is equal to consumption. Directly purchases is equal to consumption. In this question, we have this breakup. So 35 into 4. What is AP into AQ is 35 into 4 plus 795. What is 795? Is 830 minus 35. 830 minus 35, and this is at 4.25. What is 4.25? 3,400 divided by 800. 3,400 divided by 800. In case no opening stock, closing stock, AP into AQ is 800 into 4.25. 800 into 4.25. 800 into 4.25. I'm repeating again. AQ means quantity consumed. AQ means quantity consumed. Opening stock plus purchase minus closing stock. 830 units. FIFO method. FIFO method. First 35 is consumed first. Balance from LIFO method means current year purchase is consumed first and then from the opening stock. So AP into AQ, right? 35 into 4 plus 795 into 4.25. 35 into 4, 795 into 4.25. 35 into 4 and 795 into 4.25. Clear? Similarly, this is 1190. In this, 40 is into 3 rupees. 40 units is into 3 rupees. 40 units, that is the opening stock. Opening stock is into 3 rupees. Balance is 1 that is at 2.5. That is at 2.5. 40 into 3 and 1150 into 2.5. 1150 into 2.5. Any doubts? So 40 into 3, 1150 into 2.5. AQ is 830, 1190. 830 and 1190. 830 and 1190. What is RSQ? Whatever note number, RSQ calculation. For RSQ, total of AQ 830 plus 1190. Total of AQ 830 plus 1190. How much? And this is broken down as A, B. Broken down as A and B. There is a ratio given in the question. Some ratio is given. Standard ratio between A and B. A is what percentage? 40%. B is 60%. So 808, 1212. 808 and 1212. 40-60 ratio. 808 and 1212. Clear? Then SP into SQ. SP into SQ, which is the only missing data. SP into SQ is the only missing part. SQ is always computed with the help of actual output. SQ is always computed with the help of actual output. So SQ is equal to, right? SQ is equal to AO into input by output, into input by output, actual output into input by output ratio, actual output into input by output ratio. Actual output is 1700. The company produced, there is AO and there is AQ. AQ is quantity of raw material. AO is output produced. AO is output produced. 1700 into input output is, there is a loss of how much? 15%. So I assume input is 100, output is 85. You can say input is 1, output is 0.85. Doesn't matter. Any ratio you take. 100 by 85. Break it into A, B. 40%, 60%. 40% and 60%. Clear? The table would have looked like this. You have to multiply, put a total. You have to multiply and put a total. After this is done, this part you will be doing at home. If you remember the formula, this is how it is. Material cost variance broken down into price and usage. Usage is further broken down into yield and mix. Usage is further broken down into yield and mix. I don't want to write the formula, write the variance, because it will unnecessarily complicate things for some of you. For some it could be easy if you remember the logic. For some it could become difficult if you don't remember the logic. So very simple. You will be leaving around this much space for you to do the variance. The chart is just easy for you to understand. You need not present as a chart. In exam, material cost variance is equal to SP into SQ minus AP into AQ. Material price variance is equal to SP into AQ minus AP into AQ. Material usage variance is SP into SQ minus SP into AQ. Material yield variance is equal to SP into SQ minus SP into RSQ. Mix variance is equal to SP into RSQ minus SP into AQ. You need not remember the formula. Whatever I told, I was visualizing the chart in my mind. I visualize because nobody can remember so many formulae. You will unnecessarily complicate things. In this question, there is one more variance called material purchase price. Material price variance is SP into AQ minus AP into AQ. AQ means quantity consumed. AQ means quantity consumed, which is opening stock plus purchase minus closing stock. MPPV, material purchase price variance is SP into AQP minus AP into AQP. It's there in my concept book. Actual quantity purchased. Only the quantity purchased is to be taken. That is not 795 and 1150, whatever you did. 800 and 1200 as it is, and price is 4.25 and 2.5. Only current year purchase. Only the current year purchase is to be taken into consideration. No opening stock, no closing stock, no FIFO method, no LIFO, nothing is done. Directly just do SP into AQP, AP into AQP, SP into AQP, AP into AQP, and then we are done. SP into AQP, AP into AQP, and then we are done. Any doubts on this? Any doubts on this? Calculation, whatever space you want to leave, you leave it so that you do variances at home. Completing the table is after the values are written in the calculator, you'll have to multiply and put a total. Clear? Any doubts on the first? In material variance, I've done one category, which is multiple material. Let's come to question 2. Following are the details of product Fomex for the month of April 2013. For the month of April 2013, standard quantity of material required per unit 5 kg. Input output ratio is 5:1. Input output ratio is 5:1. Actual output 1000. Actual cost of material used. Actual cost of material used is AP into AQ. Actual cost of material used is AP into AQ, and there is a price variance given in the question. There is a price variance which is given in the question. So somewhere I may have to write the formula of price variance to complete the table. Otherwise, I don't want to get into the requirement is quantity used, everything, whatever they ask. I just want the table. I just want the table. This question is a single raw material. It's a single. What is multiple raw materials? Giving names A, B, C, or X, Y, Z. Here, I may be using 5 kg of raw material, but that does not mean it is a multiple raw material. This is a single raw material situation. For single raw material, write the table. SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. Objective is to complete this table. SP into SQ, SP into AQ, and AP into AQ. I have SQ information in the question. What is SQ is AO, AO into input by output. AO into input by output. So write SQ is equal to AO into input divided by output. AO into input divided by output. 1000 into 5 by 1, 5000. 1000 into 5 by 1, 5000. So objective is somehow complete the table. Somehow complete the table. So I have this data. SQ is 5000. AP into AQ is 7 lakh. AP into AQ is 7 lakh 14,000. AP into AQ is 7 lakh 14,000. We have to break it. I have to break it into AP and AQ. I'll see. And there is a variance given. Material price variance is 51,000 favorable. Material price variance is 51,000 favorable. And one data they have said actual price per kg is to be less than standard price per kg by rupees 10. Actual price is lesser than standard price. Actual price is lesser than standard price by rupees 10. By rupees 10. That's one information which they have given. Now, material price variance is equal to SP into AQ minus AP into AQ. SP into AQ minus AP into AQ. 51,000 favorable. F means positive, favorable, positive number. 51,000 is equal to SP into AQ minus 7,14,000. I will get what is SP into AQ. Then I'll again use it. I'll explain that later. First, tell me what is SP into AQ. 51,000 is equal to SP into AQ minus AP into AQ. You will get SP into AQ number. 7 lakh. I have to break it. As of now, let's write 7 lakh 65, but somehow I have to break it. Somehow I have to break this 765. Any doubts? Clear? Same thing we write again. Material price variance is equal to SP into AQ, AP into AQ. 51,000 is equal to AQ is commonly taken outside. AQ is commonly taken outside. 51,000 is equal to SP minus AP, and AQ is commonly taken outside. AQ is commonly taken outside. And the question says actual price is 10 rupees less than standard price. In other words, standard price is 10 rupees more than actual price. Standard price is 10 rupees more than actual price. Question says actual price is found to be less than standard price by how much? 10 rupees. So in short, 51,000 is equal to 10 AQ. Standard price is 10 rupees more than actual price. SP minus AP is 10 rupees. SP minus AP is 10 rupees. Any doubts on this? Standard price minus actual price is 10 rupees. What is the AQ you get? I substitute here. Tell me what is SP? 5,100 I wrote here. 5,100 I wrote here. What is SP? 1. Same 5,100 here. Same 5,100 here. What is AP? 140. This 150 is copied here. That's all. Table is over. I'm not doing anything beyond this. I'm not doing anything beyond this. In this, I've got already some answer. Question wanted actual quantity 5,100, actual price 140, usage variance formula application, cost variance formula application. Usage variances formula application. The see major worry of the student is on the formula, but major worry should be on the table. If you get the table correctly, everything else is formality. Everything else is formality. Getting the table right is very, very critical. Students, unfortunately, rather than focusing on the table, the main focus is on somehow understanding the formula, understanding the formula, understanding the formula. You end up missing out on the main computation. Any doubts on this? Clear? Once the table is done, again the same thing. Again the same thing. Now let's come to labor variances. Standard labor employment and the actual labor engaged in a 40-hour week. In a 40-hour week for a job are as under skilled, semi-skilled, unskilled. Moment I see something like this, it's multiple labor. It is multiple labor. Standard is the plan. Plan is to work 65, 20 and 15. 65, 20 and 15 and pay at 45, 30 and 15. In reality, 50, 30 and 20 work and we paid at the rate of 50, 35 and 10. Standard output is 2000 units. Actual output is 1800 units. Compute all variances. Compute all. This is multiple labor. This is multiple labor without idle time. Multiple labor without idle time. We are going to first do a computation table, only the computation table. I'm not going to do anything beyond the computation table. So for multiple labor, exactly same thing. SR into SH, SR into RSH, SR into AH, AR into AH. Exactly the same thing. Exactly the same thing. Let's open the table. Labor SR into SH, SR into RSH, SR into AR into AR into skilled, semi-skilled, unskilled, and total. Skilled, semi-skilled, unskilled, and total. First, you have to decide which category the question is. There are four categories: single labor without idle time, single labor with idle time, multiple labor without idle time, multiple labor with idle time. First, decide the category. First, decide the category. Once the category is decided, I put the information like this. What rate I wanted to pay? What rate I wanted to pay to these three people? It's given in the question. What rate? 45, 30, and 15. Please write 45, 30, and 15 at three places. 45, 30, 15 at three places. I wanted to pay 45. See, once you start writing, your table will keep getting filled, your confidence will improve. 45, 30, and 15. What we actually paid is 50, 35, and 10. What we actually paid is 50, 35, and 10. Actually paid is 50, 35, and 10. Actual hours is always actual hours into number of workers. Concept is man hours. Concept is man hours. Actual hours into number of workers. Into number of workers. When we did labor also, I said concept is man hours. Man hours, number of hours into number of workers. Skilled. In reality, we had 50 people. In reality, we had 50 people working for 40 hours, working for 40 hours. So actual hours is 40 hours into 50 workers. 40 hours into 50 workers. Semi-skilled, 40 hours into 30 workers. And unskilled, 40 hours into 20 workers. This will come at two places: 2000, 1200, 800, 2000, 1200, 800. Two places. Clear? RSH is total of actual hours in the originally planned mix. In the originally planned mix, RSH is RSQ was total of AQ, total of AQ in standard mix. So RSH, next to RSH calculation, total of AH equal to 2000, 1200, 800. 2000, 1200, and 800. How much? 4000 hours split in the ratio of 65, 20, 15. That's the plan. Plan was to do it in the ratio of 65, 20. Last question 40, 60. I had told you to split. Here the ratio is 65, 20, and 15. So split in the ratio of 65, 20, 15. 65, 20, and 15. 4000 and tell me the numbers. 2600, 800, 600. 2600, 800, and 600. Now comes the ASH calculation, one of the most trickiest in many question and most important one. SH calculation. Any doubts on the RSH part? Any doubts on the RSH part? Clear? Now coming to the SH, I will need a standard equation. The equation will tell how many hours is equal to how many units. My plan, people will work for 40 hours. How many people will work? 100 people. So my plan was 4,000 hours. My plan was 4,000 hours. 40 people, sorry, 100 people, 40 hours will give me 2,000 units. 4,000 hours and I'll get what? 2,000 units. 4,000 hours, I'll get 2,000 units. Right, standard equation. 4,000 hours is equal to 2,000 units. ST equal to AO. ST equal to AO. Standard time equal to actual output. 4,000 hours is equal to 2,000 units. ST equal to AO. Question mark equal to 1,800 units. Get me the question mark. 3,000. This 3,600 will be split in the ratio of 65, 20 and 15. Original plan. Original plan. Again, I'm repeating 4,000 hours is equal to the equation is the most important one. The equation is the most 4,000 hours is equal to 2,000 units. ST equal to AO question mark equal to 1,800. 3,600 hours is equal to 1,800 units. 3,600 hours is equal to 1,800 units, and you break it as skilled, semi skilled, unskilled, skilled, semi skilled, and unskilled in the ratio of 65, 20, 15. This is what it will be. Beyond this, my job is not there. You will leave space and you will do the variance calculation for your satisfaction. If this table is done properly, problem gets over at that stage. Problem gets over the moment the table is done properly. You have to identify which category the question fits in and complete the table. Any doubts? Clear? Can we proceed? Any doubts on this? So this is the variance calculation part. You can keep doing any amount of calculation, doesn't really matter. You will have to keep writing this. Let's come to 4. Following information is given regarding standard composition and standard rates. Standard composition and standard rates of a gang of worker. The plan is 10 is to 5 is to 5. The plan is 10 is to 5 is to 5 and rates are 62.5, 40 and 35. According to a given specification, a week consists of 40 hours and output for the week is 1,000 units. This will give me the standard equation. This will give me the standard equation. In a particular week, the gang consisted of 13 men, 4 women and 3 boys. The gang consisted of 13, 4 and 3 and actual wages were men were at 60, women were at 42.5, boys were at 32.5. And last line said 2 hours were lost due to abnormal idle time. Due to, see, if you lose time due to normal idle time, that is not idle time. That is not idle time. There was one question in exam where they said we expect 5% idle time, actual idle time 5%. ICI solved it as multiple labor without idle time. Multiple labor without. Normal idle time is not idle time. Normal idle time is fit into my calculation. What is idle time is abnormal. What is idle time is always abnormal. One question they said idle time expected 5%, actual idle time 7.5%. They took 2.5% is the idle time. What is abnormal? What is abnormal alone can be the idle time. Normal idle time is not idle time. So this question, abnormal idle time is there. This is multiple labor with idle time. Multiple labor with idle time. As I have done earlier, I'm just going to prepare the table. I'm just going to prepare the table. With idle time means SR into SH, SR into RSH, then AHW will come, AHP will come, and AR into AHP. Let's do the computation table. Computation table category SR into SH, SR into RSH, SR into AHW, SR into AHP, AR into AHP. whichever question is there in this chapter, even the bigger book, even the question bank or ICI material, I would suggest you to solve any number of question you want to. Just focus on computation table. Every question, are you getting the computation table? Once that is clear, then only you have to worry about the formula. Formula is not the difficult part. Wherever formula is the easier part. Chart is clear, formula will be very clear. Student unnecessarily shift their focus to not the chart, sorry, to the formula rather than the table. We have three category of worker: men, women, boys. Men, women, and boys. Three category of workers. Questioner said, my plan was to pay 62.5, 40, and 35, four places. This will come at four places wherever SR is there. 62.5, 40, 35. It will come at four places: 62.5, 40, and 35. SR, 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 and SR. Four places, I'll write SR. AR given in the question is 60, 42.5, 32.5. 60, 42.5, and 32.5. 60, 42.5, and 32.5. Clear? Any doubts on this? AHP is equal to hours paid into number of workers. Hours paid into number of workers. There is a difference between AHW and AHP. AHW is hours work. 2 hours have got lost. 2 hours have got lost. So men equal to 40 hours. 40 hours. 40 hours we are paying. 40 hours we are going to pay the employee. And in reality, I have 13 men, 4 women, and 3 boys. 13 men, 4 women, and 3 boys is the number I have in reality. I have in reality 13, 4, and 3. 13 men, 4 women, and 3 boys. 13 men, 4 women, and 3 boys. So multiplied with 13 men, 520. For women, it is 40 hours into 4 women, 160. Boys, it is 40 hours into 3 boys, 120. So I write it here. Objective is somehow complete the table: 520, 160, 120. 520, 160, and 120 places. AHW is hours worked. AHW is hours worked into number of worker. Worked is 38. Worked is only 38. 2 hours got lost. 2 hours got lost due to abnormal idle time. 2 hours got lost due to abnormal idle time. So AHW is equal to hours worked into number of workers. Men 38 hours into 13 men. Tell me 38 into 13. 494. Women 38 hours into 4 women, 152. Boys is 38 hours into 3 boys, 494, 152, 114. 494, 152, and 114. Clear? Now RSH is total of AH in standard mix, but we have two AH. There's an AHW, there's a AHP. So whenever we come to this situation, it is AHW because mix variance is comparing these two. Mix variance is comparing. So AHW in standard mix, total of AHW, total of AHW in standard mix is the mix variance. So here total of AHW, tell me the total of the three number. Total of AHW 494, 152, 114, 760, and split this in the ratio of 10 is to 5 is to 5. Split in the ratio of 10 is to 5 is to 5. 380. Okay, women is 190 and boys also 190. Most important part, RSH is the total of AHW. AHW. This chapter mandatory today itself somehow complete all the MCQ. You'll get full clarity because MCQs have been framed in such a manner that entire chapter will get properly revised. Any doubts on this? I write 380, 190, 190. For SH, I need a standard equation. I need a standard equation. How many hours is equal to how many units? Can you tell me how many hours equal to how many units? Last, similar to last question it is. How many hours is equal to how many units? How many hours is equal to how many units? It's not 40 hours equal to 1000 units. Not some. No, tell me what is the equation first. Tell me the equation. Yeah, it's 800 hours. 40 hours into 20 people. 40 hours into 20 people. Last question also I did 40 hours into 100 people. So write standard equation. Equation 40 hours into 20 workers equal to 1000 units. 40 hours into 20 workers is equal to 1000 units. Is equal to 1000 units, which means 800 hours equal to 1000 units. ST equal to AO. ST equal to AO. Question mark equal to AO was 960 in this question. Actual output is 960. Actual output is 960. Equation, most important is getting the right equation. It's not 40 hours equal to 1000 units. It is 800 hours equal to 1000 units. ST equal to AO, question mark equal to 960, question mark equal to 960, you will get 760 split in the ratio of 10 is to 5 is to 5. The table will look something like this. 10 is to 5 is to 5. Again, my repetition will only be the same. Table correctly, you get it, problem is over. If you get the table correctly, problem gets over. Most important part is always getting the right table, getting the right table. Any doubts on this? Variance calculation, all this you can practice later, but getting the table correctly is the most critical part. Now comes the overhead variances. We have variable overhead variances, we have fixed overhead variances. First let's discuss the variable overhead variance, then I come to fixed overhead. Particulars, budget, actual, overhead, output, hours, overhead, fixed cost, ignore it for the time being. Overhead, variable cost, number of days. Number of days has no utility as far as variable overhead is concerned. In variable overhead, we have only one format. Now write that. SR into SH, SR into AH, AR into AH, SR into SH, SR into AH, AR into AH, AR into AH. Standard time is always calculated with the help of actual output. Standard time is always calculated with the help of actual output. So this has another formula called SR into AO. This is called conversion factor. Standard time and actual output can be interchangeably used. Standard time and actual output. Standard time and actual output can be interchangeably used. SR into AO. SH is otherwise called as SR into AO. And this is otherwise called as SR into SO, standard output, not budgeted. This is standard. There's a difference between standard output and budgeted output. So the term SR into SH can be replaced with SR into AO, SR into AO, SR into AH can be replaced with SR into SO, and AR into AH is otherwise called as AVOH, actual variable overhead. AR into AH is otherwise called as AVOH, which is actual variable overhead. Actual variable overhead. Every question, see, some question we will use this, and this. Some question we will use this. Some question you will use everything on output. Some question you will use everything on hours. Some question you will do a combination. If all data is there, this is my preferred approach. I'll be using this, and this. This is what I'll be using in most of the question because these will be readily available. This will be readily available. Anyway, first question, I'll show you both approaches, both the approaches. Many a time, they may not give data on hours. They may give data only on units. When we did OAR calculation, budgeted overhead by budgeted suitable base, the base can be hours, can be units, can be machine hours, can be labor hours. So variable overhead can be on number of hours. Variable overhead can also be based on number of units. So below the table, first thing, SR per hour is equal to budgeted variable overhead by budgeted hours. Budgeted variable overhead divided by budgeted hours. Budgeted variable overhead divided by budgeted hours. 12,000 divided by 6,000, 2 per hour. 12,000 divided by 6,000, 2 per hour. 12,000 is the budgeted variable cost, budgeted hours. Budgeted variable cost divided by budgeted hours, 2 rupees per hour. SR per hour is 2 rupees per hour. SR per unit is budgeted variable overhead by budgeted output. Budgeted variable overhead divided by budgeted output. One you divide by number of hours, and second you divide by number of units. 12,000 divided by 12,000. 1 rupee per unit. 1 rupee per unit. Clear? In this question, first I will close the problem, then I tell you the conversion factor. See, in this question, actual output is readily available. 13,000. SR into AO. SR into AO. Actual output is directly given in the question. I have highlighted, I have circled SR into AO because that will be readily available. So listen, this is 13,000, and with output I will use rate per unit. With output I will use rate per unit. Listen, don't write it. Listen, with output we'll be using rate per unit. With hours we will be using rate per hour. So this is 1 into 13,000. AH is directly available. Actual hours is 6,600. Actual hours is 6,600. With hours I'll be using 2 rupees, which is rate per hour. Rate per hour is 2 rupees. Rate per unit is 1 rupee. Rate per hour is 2 rupees. Rate per unit is 1 rupee. So first column is 1 into output 13,000. Second column is 2 into hours 6,600, and third column is actual variable overhead. Actual variable cost is 13,300. Actual variable cost is 13,300. That's all. The table is over. The table is over. Be in listen mode. Writing is not very critical. Be in listen mode. This concept. SR into SH or SR into AO, SR into AHR, SR into SO, AR into AHR, AVOH. Assuming you wanted to do standard time calculation. You wanted to do standard time calculation and want to use SR into SH, I have no problem. You can do it. But here I don't need it. But in case you want to, in an exam situation, if there is a need, I need a standard equation. Standard equation is 6,000 hours is equal to 12,000 units. Standard equation is 6,000 hours is equal to 12,000 units. So 6,000 hours equal to 12,000 units. ST equal to AO, question mark equal to 13,000, question mark equal to 13,000. 6,000 hours is equal to 12,000 units. ST equal to AO, question mark equal to 13,000. What is the question mark? So this I can write 2 into 6,500. What is 2? SR per hour. SR per hour is 2 rupees into 6,500 hours. 2 into 6,500 hours or 1 into 13,000. 2 into 6,500 hours or 1 into 13,000. That's your wish, whichever way you want to write. 2 into 6,500 or 1 into 13,000 or 1 into 13,000. Same equation. 6,000 hours equal to 12,000 units. AT equal to SO, standard time actual output, actual time standard output, actual time standard output. ST equal to AO, AT equal to SO, AT equal to SO. AT is given 6,600 hours is equal to question mark. 6,600 hours is equal to question mark, and I'll get the question mark. Question mark is, so second column can become 1 into 13,200. Second column can become 1 rupee into 13,200. The second column can become what? 1 rupee into 13,200. The first column can become 2 into 6,500. Your wish which you want to follow, but our normal approach is between SH and AO. I'll prefer AO. I'll prefer AO because it will be readily available. It will be readily available. Between AH and SO, I'll prefer AH. I'll prefer AH because AH will be readily available. AH will be readily available. And AR into AH, what is AR is 13,300. First you divide by actual hours and then again multiply with actual hours. AR into AH is what? AR is dividing. Rate is you divide by the number of hours and then multiply with the hours. What is the point of doing it? Because decimal issues will happen. Decimal gap will come. AR into AH is nothing but actual variable overhead. AR into AH is nothing but actual variable overhead. So SR into SH can otherwise be called as SR into AO. SR into AH can otherwise be called as SR into SO, and AR into AH can otherwise be called as AVOH. AR into AH can otherwise be called as AVOH. Clear? Any doubts on this? Done. Next is fixed overhead variances. Fixed overhead variance calculation and all is not my worry. Calculation you will keep doing it. Coming to fixed overhead variances, same thing. First column is SR into SHR, SR into AO, SR into AO. This question has actual days and budgeted days. If you have both, then PFOH will come into picture or calendar variance will come into picture. Whenever you have actual days as well as what? Budgeted days. Second column was SR into AHR, SR into SO, SR into SO. Third column is SR into PH, which is otherwise called as PO, possible output, possible hours, possible output, and the other name is PFOH, possible fixed overhead. PFOH, possible fixed overhead. Fourth column is SR into BH, SR into BO, otherwise called as BFOH. Write this please. Last column is AFOH. These are the 5 columns. SR into SH, otherwise called as SR into AO. SR into AH, otherwise called as SR into SO. This is in fact, if you remember the table, easiest of the lot is fixed overhead variances. If you remember the table, some students find it difficult in remembering the formula and table. That's where the challenge comes. SR into PH or SR into PO or PFOH or PFOH, SR into BH or SR into BO or BFOH, and last column is AFOH. Last column is AFOH. Why this is very easy is, clear, written the table. Now I come here. First is SR per unit and SR per hour. Any question you do, SR per unit and SR per R. How will you do SR per unit and SR per R is using the data given here. Earlier we were doing variable overhead divided by variable hours. Instead of doing variable overhead, we will do it as fixed overhead. We will do it as fixed overhead. SR per hour is equal to budgeted fixed overhead by budgeted hours. Budgeted fixed overhead divided by budgeted hours. 2400 by 6000. 2400 by 6000. 0.4 per hour. 0.4 per hour. SR per hour is BFOH by budgeted hours. 2400 divided by 6000. 0.4 per hour. SR per unit. BFOH by BO, budgeted output, 2400 by 12,000, 0.2, write this 0.4 and 0.2. 2400 by 6000 and 2400 by 12,000. 2400 by 6000, 2400 by 12,000. By 6000 and 12,000. My first column you can write in your notebook 0.2 per unit into 13,000. First column is 0.2 into 13,000. SR into AO. SR into AO. 0.2 into 13,000. 0.2 into 13,000. Second column is SR into AH. SR into AH. SR now is 0.4. For hours it is 0.4. For units it is 0.2. For hours it is 0.4 and for units it is what? 0.2. So first column is 0.2 into 13,000. Second column is 0.4 into 6,600. Third column I'll come to in a minute. Fourth column is 2,400 budgeted fixed overhead. 2,400. Fourth column is directly available. Fifth column is also directly available. Fifth column is actual fixed overhead is 2,500. 2,400, 2,500. Missing is PFOH. Missing is PFOH, for which, as I said, I need both actual days and budgeted days. Both there, I can do it. Both not there, I cannot do it. Both not there. So what we do for PFOH is right. It is very simple. 50 days fixed overhead is 2,400. 50 days fixed overhead is 2,400. PFOH says if more days work, more production will happen, more absorption will happen. Cost will not go up, but more days, more production and more absorption, more absorption. So 54 days equal to question mark. 54 days equal to question mark. 50 days equal to 2,400. 54 days equal to question mark. What's the number? That's all. Table is over. Table is over. We can keep calculating any number of variances. We can keep calculating any type of variances. Focus is very simple. Completing the table. Completing the table. If table gets completed, then only it will become easier for you to do in an exam situation. If you're not able to do the table, it will become very, very difficult. And looking at the kind of difficulty paper gives, missing out on 1 or 2 chapters can become very troublesome in exam. Because I said that mock test paper was a very tough one. In that, the only easiest question was standard costing. 10 mark was a very easy question in standard costing. But what students do, they don't prepare in this paper. They say standard costing is tough, I'm not going to prepare for it. In case you have not prepared for standard costing and that comes as an easy question, you'll unnecessarily lose marks. Any doubts in this? Any doubts in this? Just give me a minute. Okay, I'm going to do that question which I said. This was the question which came in exam on standard costing. It's a 10 mark case. That is the mock test paper. It's the mock test paper where everything else was very, very tough. Not every question. So at least 40 marks was very tough. Some were very lengthy. But this 10 mark question In case you have clarity on concept, you can close it in 5 minutes because it's a case scenario based question. 10 marks, 5 minutes is possible. But only thing is, obviously, clarity has to be there. I'm not reading the first two para, they are of no use. That just tells what the company is doing, all that. Information is very simple. The only information I have is units produced, budgeted data 10,000, actual data 9,500, fixed overheads 20 lakh, 1950 plus 1 lakh is 2050. They have given some information, but that's of no use. Basically, actual fixed overhead is 20 lakh 50,000 and the planned fixed overhead is 20 lakh. The budgeted fixed overhead is 20 lakh. Hours worked 15,000, 14, 250. 15,000 and 14, 250. Variable overhead rate 50 per hour, 50 per hour, and reality 50 for the first 10,000 and 60 for the additional, 60 for the additional. I have to do a table for variable overhead variances, do a table for fixed overhead variances. If I do that, problem is over. If I do the table properly, the problem is over. The requirements is fixed overhead cost variance, fixed overhead volume variance, variable overhead efficiency variance, variable overhead expenditure variance, fixed overhead expenditure variance. All these variances will come from the table, So I am not getting into the calculation part of it, but if you are able to do the table, it is taken care of. Now coming to variable overhead, they have said 50 rupees per hour. Per hour rate is given. Per unit rate is not given in the question. If I want, I can calculate or I can leave it as it is. 50 per hour is variable overhead. 50 per hour is variable overhead. Now coming to the variable overhead part, our table looks like this. SR into SHR, SR into AO, SR into AH, SR into SO, AR into AHR, AVOH. This is the table. Now, standard rate is 50 per hour. Can you read the question and tell me what is the standard equation? It is there. What is the standard equation? The equation is there in the question. It's there in the table only. What is the standard equation? How many hours equal to? 15,000 hours is equal to 10,000 units. So my standard equation is 15,000 hours equal to 10,000 units. Then ST equal to AO. ST equal to AO. Question mark equal to 9,500. Question mark equal to 9,500. What is the question mark answer you got? 14,250. First column is 50 into 14,250. Second column is also 50 into actual hours is 14,250. Actual hours is 14,250, which means there is no efficiency variance. Efficiency variance will be 0 when you do the calculation. When you do the calculation, 50 into 14,250 and AR into AH is 50 into 10,000. 50 into 10,000 plus 60 into 4250. That extra 4250 at 60 and the original is at first 10,000 is at 50 rupees and extra hours is at what rate? 60. So 50 into 10,000 plus 60 into this is 4 marks calculation. There is a question requirement of efficiency variance and expenditure variance. This will take care of 4 marks requirement. This will take care of 4 marks requirement provided you are able to write this properly. Yes, if I wanted to use rate per unit, if somebody wants to use rate per unit, it is like this. 10,000 units equal to 15,000 hours. 1 unit equal to 1.5 hour. 1 unit is equal to 1.5 hour. Every hour is 50 rupees. So 1 unit is 75 rupees. 1 unit is 75. First column can become 75 into 9,500. 75 into 9,500. If you want, you can use first column as what? 75 into 9,500. 75 into 9,500. SR into AO or SR into SH, whichever way you want to use it. Both are okay. Clear? Any doubts on this? Now coming to fixed overhead. Question does not have data on actual days and budgeted days. It doesn't have information on actual days and budgeted days. In case that information is not there, in case that information is not there, that PFOH will not come. PFOH will not come. So my table will look like this. SR into SHR, SR into AO, SR into AHR, SR into SO, SR into BH, BO, BFOH, AFOH, BFOH and AFOH. Any question, I normally fill the last two columns directly because it will be there. BFOH is 20 lakh, BFOH is 20 lakh, AFOH is 1950 plus 1 lakh, AFOH is 1950 plus 1 lakh. So this is 20 lakh and this is 20 lakh 50,000. SR per unit is 20 lakh divided by 10,000 units. SR per unit is 20 lakh divided by 10,000 units and SR per hour is 20 lakh divided by 15,000 hours. 20 lakh divided by 10,000 units and 20 lakh divided by 15,000 hours. 20 lakh divided by 10,000 will become 200. So my first column is 200 into 9,500. SR into AO. SR into AO. 20 lakh divided by 15,000 is how much? 20 lakh divided by 15. 133.33 into 14 250 into 14 250. If you do the table properly, you would have got 10 marks in this. Else, this would have become very tough because in case you are not aware of the concept, you will not be able to get to the answer. This would have ensured 10 marks in the question, which was the easier part. This was the easier part of the paper. Ideally, will not take even if you try to do proper, because in a case scenario you need not show the proper workings and all. Even if you try to analyze in detail also, it will take you maximum 10 minutes, maximum 10 minutes to close the question. But the challenge is people think it's a tough area and they leave it. They leave it. Leaving certain areas and choice and all will not work in case paper turns out to be very tricky. Clear? Any doubts on this? Okay, this is one more thing which is called budget ratios, which is called budget ratios. Budget ratios have been frequently tested in exams. Either it comes as a proper question like this, or it will come as a 2 mark MCQ. It will come. So what ICA has done is in the recent MTPs and other places, what they have done is first 10 marks is one case scenario, another 10 mark is one more case scenario, and then 5 questions of 2 marks which are from different areas. 5 questions of 2 marks which are from different areas. Those 2 mark question, budget ratio is one of their favorite area which they have added in RTP sometimes, which they have added in MTP. Some questions have come. Now, for me to remember this, somewhere I have to remember this chart. Efficiency, capacity, calendar. This is the chart. Listen, efficiency ratio is SH divided by AH. That's all. You have to divide rather than subtract. SH divided by AH. Capacity ratio is AH divided by PH. AH divided by PH. Calendar ratio PH divided by BH. PH divided by BH. Volume ratio, first item SH, last item divided by BH. SH divided by BH. So same chart we are going to use, but I will not write SR. I am not going to multiply with SR. The chart is like this. In order to do the FOH ratios, my chart is like this. SH, AH, PH, BH. I can write SR from this side, but I am not going to write SR in the table. SR will not come in the table. This part is efficiency, capacity, calendar. Efficiency, capacity, and calendar. In case calendar is not there, PH will be removed and it will be called BH. It will be called BH. When will calendar be removed? In case you do not have information on actual days and budgeted days. In case you do not have information, that will get removed. So I have efficiency ratio, standard time by actual time. This was a labor chapter formula. Efficiency ratio, standard time by actual time is a labor. Capacity, actual time by possible time. Actual time by possible time. Calendar, possible time by budgeted time. Possible time by budgeted time. All together is called volume or activity. All together is called volume or activity, which is SH by BH. SH by BH. Apart from that, there are 2-3 extra formulae which ICI has added. I'll explain them. So efficiency ratio, standard hours by actual hours. It's coming from that chart. SH, AH, PH, BH. SH, AH, PH, and BH. Standard by actual. Calendar is possible by budgeted. Activity. Activities all three put together. Activities all three put together, which is standard hours by budgeted hours. Capacity is, there are three types of capacity ratio ICI asks. They may ask a ratio called standard capacity usage ratio, actual capacity usage ratio, and actual usage of budgeted capacity. Actual usage of budgeted capacity. This actual capacity usage ratio comes from our formula. Actual capacity usage ratio comes technically from the formula. Actual, sorry, that also doesn't come. They have given a variant. Leave it from the formula. Just give me a minute. Okay. So I have three formula. One is called standard capacity usage ratio. What is standard capacity usage ratios? I can produce 5 lakh units, but I plan to produce only 4 lakh. I plan to produce only 4 lakh. 4 lakh divided by 5 lakh is called standard capacity usage ratio. Standard capacity usage ratio. You did only 4 lakh, whereas you could have done 5 lakh. This is standard capacities. What are you planning to achieve divided by what is maximum possible? What is maximum? Against this 4 lakh, in reality, I did only 3 lakh. 3 lakh by 5 lakh is called actual capacity usage ratio. And 3 lakh divided by 4 lakh. 3 lakh divided by 4 lakh is called actual usage of the budgeted capacity. Actual usage of the, there is a maximum capacity, there is a budgeted capacity, there is an actual capacity. Maximum is what is fully possible, budgeted is what you want to achieve, and actual is what has been achieved by the organization. What has been achieved by the organization. So capacity ratios, we will not use the table, we'll just do it like this. And these three, efficiency, calendar, and activity formula will come from the chart. Efficiency, calendar, and activity formula will come from the chart. Let's see it in a question now. Standard working hours, 8 hours per day of 5 days per week. I'll keep reading, I'll explain. 8 hours per day of 5 days per week. So 40 hours. Maximum capacity 50 employees. Maximum capacity 50 employees. So my maximum capacity is 40 hours into 50 people. 40 hours into 50 people. The question is talking about 4 weeks. This is my maximum capacity. This is my maximum capacity. In that maximum, I want to achieve how many employees? 40. I want to do only 40 employees. My maximum is what? 50, but I am happy with only 40. I'm happy with 40. So my budget is 40 hours into 40 people into 4 weeks. Maximum possible 8,000. Budgeted is 6,400. Reality is 6,000. Reality is 6,000. Maximum is 8,000. Budgeted is 6,400. And reality is what? Only 6,000. The 6,400 is also given in the question. Expected to be worked. Expected to be worked. Standard hours expected to be earned. Standard hours expected to be earned. And standard hours earned. These two numbers technically need not be given in the question. That's what I've calculated. 8,000 hours and 6,400 hours. 8,000 hours and 6,400 hours. What we have done only 6,000 hours of working, and that is equivalent of 7,000 hours. That is equivalent of, people worked only for 6,000 hours. but they produced something which is equivalent of what? 7,000, which is equivalent of 7,000. You need not, okay, write the table. The table is like this: SH, SH, AH, TH, BH, and one more is maximum hours. Standard hours, actual hours, possible hours, budgeted hours, and maximum hours. Standard, actual, possible, budgeted. SH, AH, PH, BH are fixed overhead formulae. Maximum is one extra addition. Maximum is 8,000. Maximum is 8,000. I'm planning to achieve 6,400. I'm planning to achieve 6,400. I achieved only 6,000, but that is equivalent of 7,000. Why possible hours is coming in the question? Because there is one special day holiday. One special day holiday. It's like this: 20 days people will work for 6,400. Plan 20 days, 6,400 hours. 20 days is equal to 6,400 hours. 19 days equal to question mark. 19 days equal to question mark. 6,080. First is comparing these two, right? Efficiency ratio is SH divided by AH. Efficiency is SH divided by AH. Efficiency is standard time divided by actual time. Standard time divided by actual time. 7,000 by 6,000, what's the number of hours? So what is the percentage per into 100? 11 into, sorry, 116.67 percentage. 116.67 percentage. First is efficiency. Second is capacity, don't use it. Capacity, we have three variants, we'll see it later. Calendar is comparing these two, PH by BH. Calendar, PH divided by BH. 95%. SH with BH is activity or volume. SH with BH. First item versus the fourth item. Standard time by budgeted time. Standard time by budgeted time is called activity ratio. Activity is 10 point. Clear? See, there is one capacity ratio which I can do as the 6,000 divided by 6,080, but they have asked different types of capacity ratio. I'll discuss them quickly. Standard capacity usage ratio is, I plan to work for 6,400 on a base of 8,000. I plan to work for 6,400 on a base of what? 8,000. Actual capacity usage ratios, I'm working 6,000 on the original plan of 8,000. On the original, that is the maximum plan of 8,000, and actual usage of budgeted is 6,000. 6,400 can also be taken as 6,080, can also be, because this is what capacity is, but I think ICI does 6,400, so I leave it whatever ICI is doing. 6,000 by 6,400 can be argued as 6,000 by 6,080 also. 80, 75, 93.75, 116 and 95. 116 and 95. Clear? Now, questions may come in exam like this also. Standard capacity usage ratio 80. Actual capacity usage ratio 60. How much is the actual usage of budgeted capacity? I am explaining the various interlink. Listen. Standard is 80 on 100. 100 is maximum. Let's take. Actual is 60 on 100. Actual is 60 on 100. What is actual usage of budgeted capacity? 60 on 80. 60 on 80. 60 on 80. This is the interlinkage. This is the interlinkage. 80 on 100. 60 on 100. 60 on 80 is called actual usage of budgeted capacity. Actual usage of budgeted capacity. This can come as a 2-mark MCQ. Actual usage of budgeted capacity. The formula technically is actual capacity usage ratio divided by standard capacity usage ratio, but I don't remember the formula. I'm just explaining you the logic. 80 on 100, 60 on 100, 60 on 80. One of this can come. A company has a capacity utilization of 85%, activity is 95%. Which of the following is efficiency ratio? Now listen, activity is equal to efficiency plus capacity plus calendar variance. If you do as a variance, if you do it as a variance, if you do it as a ratio, efficiency into capacity into calendar, efficiency into capacity. I'm not talking about those three different capacity ratio. I'm not getting into actual usage of all those are different ratios. Okay, efficiency ratio into capacity ratio into calendar ratio is equal to activity, is equal to activity. Activity ratio given in the question is 0.95. I'm writing 95 as 0.95. Capacity is 0.85. Calendar is not there. Calendar is not there. Tell me what is efficiency now. 112. 0.95 divided by 0.85 into 100 to express in percentage. Into 100 to express in percentage. Efficiency into capacity into calendar. Not those three capacity ratio. They are altogether different. Standard capacity usage ratio, actual capacity usage ratio, and actual usage of budgeted capacity. All those are entirely different. Let's not link it with them. Let's not link it with them. But if you add, multiply the three. If you multiply the three, you will get activity ratio. You will get activity ratio. Here they have not, I am not multiplied with calendar because calendar is not there. Otherwise, calendar also will have to be multiplied. Calendar will also have to be multiplied. Clear? Any doubts on this? 7 is a variant of this type of a question, that is fixed overhead and variable overhead. Only add on when you do at home. I want you to just know there is a semi variable cost. What you need to do is you need to remove this from the question and add some part to variable expense, add some part to fixed expense given as per the question. Then it becomes like a normal problem. Then it becomes like a normal problem. A part of it, the question says 60% is fixed, 40% is variable. So add 60%, 1 lakh 80, 60% to the fixed cost, 1 lakh 80, 40% to the variable cost. This is the budget reality. 19,200, 60% to the variable cost, 19,200, 40% to the, so whatever, fixed and variable, whichever way you want to add it, consider that, and thereafter please start calculating whatever the question has asked. Variable overhead cost variance is asked, variable fixed overhead volume, expenditure, calendar, cost, whatever they ask, you can keep calculating it. Only thing is, please move a part of the expense to the variable, a part of the expense to the fixed. This is a homework question, or this is a question which you will do at home. Okay, I have few comprehensive questions which I want to discuss. I'm giving you a small 10 minutes break, then maybe another 30 minutes after, 30 to 45 minutes after the break, I'll do those comprehensive questions. At least I'll discuss those comprehensive questions. Standard costing is almost over. It's almost over. Formula, I have not discussed it. Formula, again, I'm repeating formula. You'll have to go through those chart technique. But how to work out, we have seen different variety of question. This should be sufficient from an exam point of view. And all the MCQs you have to do. We'll take a 10-minute break and then I do the comprehensive question. Okay, I'll now discuss comprehensive question. What is comprehensive question is which asks for combination of material, labor, as well as overhead variance, or only material and labor, something around that. Okay, coming to question 9. ABC Limited has prepared, we'll discuss this. ABC Limited has prepared the following estimation for the month of April. Material A, material B, skilled labor, unskilled labor. Till now, my information says there's a material A, material B, there's a skilled labor and unskilled labor. Normal losses 10% of the input. Normal losses 10% of the input, and an idle labor time of 5% of labor hours was also expected. Idle labor time of 5% is expected. Expected is called normal idle time. Expected is called normal idle time. At the end of the month, the following information has been collected from the cost accounting department. Company has produced material A, all this data they've given, and they've asked for all labor variances as well as material variances. We'll quickly try to do the table. Material variances, multiple material. There is a material A and material B, and labor variances is multiple labor without idle time. Multiple labor without idle time, because question is saying 5% is expected. What happened? I don't know. Whether 10% happened, 15% happened, or 6% happened, we are not aware. And question is also not asking for idle time variance. Question is not asking for idle time variance. In this, the most trickiest part will be SH calculation. So let's see the material variances part. Open the table. Material variances, SP into SQ, SP into AQ, SP into RSQ, SP into AQ, AP into AQ. Material A, B. The most trickiest part will be on SH calculation, material A and B. What is the price we are planning to pay? Price which we are planning to pay, standard price. 45 and 30. 45 rupees and 30 rupees at 3 places. 45, 30. 45 and 30. Actual price paid is 43 and 32.5. 43 and 32.5. Objective is to get the table, so focus is quickly. If you get the table, everything else will automatically fall in place. 43 and 32.5. AQ, what is the actual quantity used or purchased, whatever is given in the question. Actual quantity 900 and 650. That is the actual quantity used by the company. Could be purchased, not purchased, I'm not bothered. 900 and 650. 900 and 650 at 2 places. 900 and 650 at 2 places. RSQ is the total of AQ. RSQ is the total of AQ. 900 plus 650, 1550. 900 plus 650. RSQ is the total of AQ. Total of AQ in 4 is to 3. 800 is to 600. In 4 is to 3. In the ratio of 4 is to 3. 900, sorry, 800 is to 600. 800 is to 600. 4 is to 3. Split 1550. 4 is to 3. 886 and 6. 664. I can write 2 decimal also, that's okay. 886 and 664. Split in the ratio of 4 is to 3. Split in the ratio of 4 is to 3. Standard quantity can become tricky many times. This is not very tricky, but tell me, SQ, how do I calculate? SQ calculation, how will you calculate? Based on what? SQ is computed with the help of what I said? Actual output. AO into input by output. AO is 1480. AO is 1480. Input output ratio is somewhere given in the question. There's an input output ratio given. What is the input output ratio? Hundred by 90. There is a loss of 10%. There is a loss of 10%. 100 by 90, and I'll 1480 is given. Company has produced. Company has produced 1480. Actual output is 1480 into 100 by 90 into 100 by 90. What's the number you get? Split that in the ratio of 4 is to 3. Split that in the ratio of 4 is to 3. So this is how it will look. And cost, price, mix, yield, everything is just a formality. Cost, price, mix, yield, everything is a formality. This is the table. Any doubts on this? Clear? Then comes our labor variances. Labor variance, as I said, it is multiple labor without idle time. Multiple labor without idle time. There was one exam question where they said 5% expected, 7.5% happened. So from hours paid, you subtract 2.5%. You subtract only 2.5%. What many students taught us, from this I'll subtract 5%. From this I'll subtract 5% as idle time. There's no idle time because question has not given what is the actual idle time. What is the actual idle time? Table will have, right, SR into SH, SR into RSH, SR into AH, AR into AH, skilled, unskilled, skilled and unskilled, skilled and unskilled. The best requirement here is the SH calculation, which is the very tricky part. Very good way the question was framed. SR is 37.5, 22, 37.5, 22. Always SR and AR is very simple, straightforward, directly available. 37.5 and 22. AR is 35.5, 23. 35.5 and 23. AHS copy paste. There's no idle time. There is no idle time. Let me be very clear. There is no idle time. I don't know. Because idle time, if it was there, I would have done AHW and AHP. 1200, 860, 1200, 860. T. In case you are not able to get standard time, at least this much you can do. You can calculate some of the variances. Some of the variances would have come from this table itself. Only difficulty most of the time is standard quantity and standard time. Standard quantity and standard time. In case you are not getting that, standard quantity will be used for the main variance and one more variance. So out of the 4 variances, 2 you can get it without standard quantity, and out of the 4 labor variances, 2 you can get without the SH. Whatever is possible, at least you should complete. RSH is total of AH, which is 2060, 2060, split in the ratio of 5 is to 4. Split in the ratio of 5 is to 4. 2060 split in the ratio of 5 is to 4. How much? 1,144 and 9, 16. So all this is, till this, nothing was difficult in labor variances. You should start writing. Unless you write it, you will not understand. You should write SR. SR you fill at 3 places. Confidence will improve. AR you wrote, again confidence improves. AH you wrote. I have not done any calculation. AH I just put a total and split. SH is a very tricky one. Listen. Standard equation is given in a very roundabout manner here. Listen. My plan was to work the original plan 1800 hours. The original plan is 1800 hours. In this, 5% is normal idle time. So we were working for 1710 hours, 1710 hours, 1710 hours. This will, the original plan, this will give me 1400 kgs minus 10%. This will give me 1400 kgs minus 10%. 10% is my standard loss, 1400 kg. So they linked it with the raw material. They linked it with the raw material. So this will give me 1260 units. 1260, and this is tested in one of the MCQ. If you see some MCQ will test this 1260 units. Thereafter ST equal to AO question mark equal to 1480. Question mark is equal to 1480. 1710 hours is equal to what? 1260 units is equal to 1260 units. ST equal to AO question mark equal to 1480. What is the question mark you get now? 2009, and split that in the ratio of 5 is to 4. Split that in the ratio. This came, I think, either in May 24 exam or September 24 exam. One of the exam, this question has come. I am sure one of the exam they ended up asking this question. So 2009 split in the ratio of 5 is to 4. Split in the ratio of 5 is to 4. So this is how it will look after you split 1116, When my repetition is very simple. If you prepare the table, everything is automatically taken care of. Everything is automatically taken care of if the table is prepared properly. Variance calculation you do few questions, go through the charts, whatever you want to do, or go through the detailed video also. In my YouTube channel, there's a detailed video on standard costing where formula calculation part you listen, problem solving you don't listen, formula again listen, problem you don't listen. So that's your wish, however you want to do, or you have learned it from some other teacher, follow whatever approach you want to follow. But my point is very simple. If this table is done correctly, everything else is just a formality. Any doubts on this? Okay, another comprehensive question which came in September 24 RTP. ABC Private Limited is engaged in the manufacture of a product Q. Product has the following standard production requirements determined by the technical team. Determined by the technical team. Raw material 2 units at 2 per unit. Raw material 2 units at 2 per unit. These are very important things when you read. 2 units at 2 per unit means input output ratio is 2 is to 1 and SP is 2 rupees. Standard price is 2 rupees for every unit of raw material. Skilled labor 1 unit is equal to 2.5 hours. 1 unit is equal to 2.5 hours and 5 per unit. 5 per hour is the SR. 5 per hour is the SR. Fixed overhead 7.5 per unit. I can break it as 2.5 hours into 3 per hour. Why 2.5 hours? Because the same basis. The same basis into it could have been what? 3 per hour. I'm just breaking it. What this means is SR per hour is 3 rupees for fixed overhead and per unit is 7.5. Per unit is 7.5. The input of raw material Z has a yield of, okay, so input output ratio is not 2 is to 1. Input output ratio is 2 is to 0.8 because it will give only 80% output. It will give only 80% output. So 2 is to 0.8. 2 is to 0.8. Yield of 80%. Actual quantity consumed is 24,000. Usage variance 2000 favorable. Usage variance is 2000 favorable. So they have given some variance. Further, the actual material cost is 45,000. Actual cost is 45,000. Actual working hours were 30,000, for which the labor cost paid by the company amounted to 1,20,000. Some idle time variance is there. Some idle time variance is there. Actual fixed overhead 1,50,000. Expenditure variance is 25,000. So some data points they have given. Some data points we have to calculate. Now coming to material, it is a single material problem. It is a single material problem. So open the table. SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. Standard price is 2 rupees per unit. Standard price is 2 rupees per unit. Standard price is 2 rupees per unit. Actual quantity consumed is 24,000. Actual quantity consumed is 24,000. Actual quantity consumed is 24,000. and they have said actual material cost. Actual material cost is AP into AQ is 45,000. Can you tell me the AP? 45,000. Now I don't know what are the requirements of the question. I'm just filling it. My purpose is just to fill the table 1.875. Question has said usage variance is 2000 favorable. Usage variance is 2000 favorable. Usage variance formula is SP into SQ minus SP into AQ. That will give me the first column. So material usage variance is SP into SQ minus SP into AQ. SP into SQ minus SP into AQ. Formula and all you will have to remember. So I can't help it on the formula side. Usage variance is SP into SQ minus SP into AQ. They have given the variance to be 2000. So 2000 is equal to 2SQ minus 48,000. SQ is equal to 25. Clear? Table is over. Job is over. Requirement of the question is C. Actual output is produced till now with AO you are calculating SQ. Now reverse is SQ is equal to AO into input by output. SQ is equal to AO into input by output. It works in the reverse order now. AO into input by output. 25,000 is equal to AO into 2 divided by 0.8. 2 divided by 0.8. And this part will also come when I do the calculation, material price variance and material cost variance. I'm not doing the calculation, but this part will also come. Any doubts on this? This is using the material variance, using the material variance. Then comes the labor variance part. This is single labor with idle time. Single labor with idle time. Why with idle time? There is a reference of idle time variance in the question, and no multiple category of labor. No multiple category of labor. So my table will be SR into SH, SR into AHW, SR into AHP, AR into AHP, SR into SH, SR into AHW, SR into AHP, AR into AHP. Clear? SR given in the question is 5 rupees per hour. SR given in the question is 5 rupees per hour. So 5 into 1 unit is equal to 2.5 hours as per the question. 1 unit is 2.5 hours. AO equal to ST. AO we calculated. 10,000 units is equal to question mark. 10,000 units is equal to question mark. How much you got? 25,000. With this, my third MCQ can get answered. And if I want, I can copy these numbers also. 28,000 is net actual hours, idle time is 2,000 hours. If I want, I can copy these numbers also, because see, third MCQ requirement is standard hours, net actual hours, and idle time. Standard hours 27,500, not my answer. Standard hours 22,500, not my answer. Standard hours 24,000, not my answer. Standard hours 25,000, which means net actual hours has to be 28,000. Idle time has to be 2,000. I can, if I want, I can copy paste. If I want, I can copy paste. Anyway, we will do the calculation. We will do the calculation. So SR into SH is 5 into 25,000. Then the question has said, during the year, actual working hours were 30,000. Actual working hours were 30,000. So last column is 30,000. Actual working hours are 30,000. And I paid 1 lakh 20 for 30,000 hours. I paid 1 lakh 20. So which means 4 into 30,000. 4 into 30,000. 1 lakh 20 5 into 30, 1 lakh 50. 5 into 25, 1 lakh 25. AHW is missing. AHW is missing, for which they have given this variance. Labor idle time variance. Labor idle time variance. Labor idle time variance as a formula. Labor idle time variance is equal to SR into AHW minus SR into AHP. Idle time variance is negative here. Minus 10,000 is equal to 5 AHW minus 1 lakh 50. You will get AHW. AHW is net actual hours. Net actual hours is hours work technically. 5 AHW minus 150. 5 AHW minus 150 was the number you get, which is what I was saying that I could have got this number. Standard hours 25,000, net actual hours is 28,000, idle time is 2,000. Idle time is 2,000. Then the question has asked for labor efficiency and labor rate variance. See, I've been telling this from the beginning. In case 4 MCQ options are there, rate variance 25,000 adverse, rate variance 30,000 adverse, rate variance 30,000 favorable, rate variance 25,000 favorable. Just calculate rate variance. Just calculate rate variance. Let's not get into efficiency. Let's not get into efficiency. We'll just calculate what? Rate variance and copy paste the answer. Copy paste, because rate variance, once you get, for example, rate variance here is these two, 30,000 favorable. Rate variance is 30,000 favorable. With 30,000 favorable, I have 25,000 adverse. With 30,000 favorable, I have 25,000 adverse. Fixed overhead volume variance. I'm not doing the fixed overhead part. Fixed overhead entire table is not needed. Volume variance formula, if you remember, it is SR into AO minus BFOH. SR into AO minus BFOH. SR per unit is 7.5. AO we calculated 10,000. We calculated 10,000. So 7.5 into 10,000 is 75,000 minus budgeted fixed overhead somewhere will be there in the question. You calculate that and then calculate fixed overhead volume variance. Calculate fixed overhead volume variance. This is a practice question for you. Another here, it's a reverse working. From the variances, you will have to get to the table from the variances. See, whenever you read something like this is the most important data. Standard material input is 20 kilogram. Input output ratio is 20:1. Input output ratio is 20:1. Standard price is 24 per kilogram. Standard price is 24 per kilogram. Standard rate for labor is 72 per hour, and standard equation is 5 hours is equal to 1 unit. 5 hours is equal to 1 unit. Fixed overhead is 100% of labor. So whatever is the rate for labor, the same is the rate for overhead. The same is the rate for overhead. Clear? Any doubts on this? With this, I am covered with standard costing. As I have been telling, in the classes I have done, see, usually my regular costing classes go on for 150 hours. We have spent around 30 hours effectively, 30 to 35 hours effectively we have spent in the class. So obviously that amount of coverage is not possible, but I'm very confident about the kind of coverage I have done. You just need to supplement it with what I told in each of the chapter. Solving MCQs will be very, very critical. Unless you complete that, your clarity on concepts will not be there. This paper becomes difficult for students because somewhere the clarity on concept is not there. If you struggle with concept clarity, you are going to find it very, very difficult to complete the paper. And also from an exam point of view, completing paper is becoming a challenge. So only one rule I have been telling every student of mine: 1.5 minutes per mark. If a question is a 10-mark question, try to complete it in 15 minutes. If you are almost 90% done, spend some more time and complete it. But if you are only halfway and 15 minutes is over, no point in spending more time on that question. No point. You can come back later. You can come back later. Leave space, come back later. But rule is 1.5 minutes per mark, which is 15 minutes for a 10-mark question and 150 minutes for your 100-mark paper. Extra 30 minutes is to fill those gaps which you could have left. At that time, you will think which question you want to fill because you know which question you are more confident of. If you're not confident in a question and you try spending more time on that, doesn't serve any purpose. You are just wasting time. Wasting time will not help you. With this, I am done with everything. If there are any questions on how to write exams or any preparation question, anything you have, let me know, else we end the session. If there are any doubts, any guidance you need, let me know, else I am kind of done. One chapter is pending, that you take care on your own. Anyway, my YouTube channel has certain videos around that, also has some revision videos, you can watch that. Let me know if there are any questions now, anything you have, any doubts, anything on the subject, my subject, other subject, anything, anywhere there is any guidance needed, let me know, else we end it. Clear? No doubts, everything is fine, full costing is fine. Okay, we'll end then. Thank you friends.